breakout.
I'm Al Brooks. Thank you for watching Brooks Trading Course. This is the first of 8 videos on breakouts.
第4天，这没开到啦。Okay.
I'm going to begin by talking about exactly what I mean by breakout. I'll then talk about my 80% rule, and that is in part that 80% of breakouts fail. Next, I want to make a point about every reversal being a breakout. That 80% of breakouts fail. Next, I want to make a point about every reversal being a breakout. And finally, since breakouts fail, in a trading range, traders need to buy low, sell high, and scalp.
Buy low, sell high, and scalp.
A breakout is simply a trend bar, or a series of trend bars. So every trend bar that you see on the chart is a
breakout 属于 trend bar.
A breakout is simply a trend bar. Or a series of trend bars. So every trend bar that you see on the chart is a breakout, and sometimes you get a breakout is simply a trend bar, or a series of trend bars. So every trend bar that you see on the chart is a breakout, and sometimes you get a series of trend bars and they form a breakout. Bear breakout there, bull breakout here. It can be one bar, and it can grow into several bars. A breakout always is a move beyond. On some kind of support or resistance. If you have a bull breakout like this, there are several resistance levels that the market is breaking above. First of all, the high of the prior bar is always resistance. Next, you have a lower high. Next, you have a trend line. Next, you have the moving average. Here, we had a double bottom and a bear breakout, small head and shoulder stop. Left shoulder and right shoulder, and it failed. And the bulls were able to get a micro double bottom. So the bears tried to sell off, and the bulls bought. The bears tried to sell off again, and the bulls bought even more aggressively, creating a good buy signal line. In this particular case, the market broke below a double bottom, and then it broke back above. So that is a breakout back above a double bottom. As breakouts grow, they tend to go above.
Break back above resistance at above one. Break back above resistance at above one.
Higher and higher resistance levels in the case of a bull. Breakout like here. At this point, it broke above the moving average and finally got a close above the moving average. I always look at trend lines, and there are different ways to draw them. I could use these two highs, or I could use this high and that high. And clearly, the market is breaking above the trend line as well. So the market's breaking above the bear trend line. I said that it broke above the high of this bear bar, but I also look at prior lower highs in a bear trend. And the more resistance that the market breaks above, the more likely the breakout will have follow through and the second leg up or multiple legs up. So we're breaking above the prior lower high. And then we broke above another lower high. At this point, you can call this a trading range. Every head and shoulders top, left shoulder, head, right shoulder is a trading range. Maybe the trading range began here. We went down, moving up, moved down, moving up, down, up. It's a lower high, but it's also a trading range. So we broke below the range, and then we broke above the range. My 80% rule is that markets have inertia, And 80% of the time, they resist change. So 80% of the time, if the market's in a trend, reversal attempts will fail. And 80% of the time, if the market's in a trading range, change. So 80% of the time, if the market's in a trend, reversal attempts will fail. And 80% of the time, if the market's in a trading range, breakouts will fail. And that is the reality. So the market broke.
That is reality.
Above this low, reversed up, broke above this high, reversed down. And it's just repeatedly reversed breakout attempts. New high, fail. New low, fail. We tried to reverse up, fail. Broke to a new low, fail. Broke above this high, fail. Above this high, pulled back. This high, we pulled back, tried to reverse down, tried to fail. Here we tried to reverse down, and we succeeded. We broke below the bottom of the strong rally, but the breakout failed. Also, a really important point about breakouts is that on any chart, any time frame, only about 10% of the bars will be in a strong breakout. That actually has follow through. So you can look at this chart, maybe it has 100 bars on it, and we have a few bars down. here, a few bars up here, a few bars down here. Okay. And a few more bars down there. But only 10% of the bars actually follows through. So this sell-off had a little bit of follow through. This buying had a little bit of follow through. This sell-off had a little bit of follow through. Most of the bars, 90% of the bars in the chart are either in channels or in trading ranges, even if the bars are pretty big trend bars. When the market's in a channel or a trading range, 80% of the breakouts will fail to get very far. When the market's in a channel, or trading range, 80% of the breakouts will fail to get very far. On this slide, we have a pair of pretty good bull bars, especially this bar, followed by a bear bar. And then we have a bull flag, a 1 bar pullback. You can call it a 2 bar pullback. You start at the pullback here. This bar pulls back below that bar, so this is technically a pullback on this time frame. And it's about a 50% pullback, and it's a bull bar. Tail on top, following a big bear reversal bar. Not a high probability buy, but the market's still always in long at that point, and it is a high one bull flag, so it is a buy setup. But bull flags like this very commonly have breakouts that fail and reverse down.
Traded by weak high 1 forward flag, hoping for successful bull break.
So a lot of traders will buy on a stop just above the high of this bar, taking a chance that if the breakout is not successful, maybe we'll pull back from the bar 2, hold above this level, and then resume up with a high 2 or a high 3. As I said, this is a high 1 bull flag, but a pretty prominent tail above and a prominent tail below. The body is less than half the height of the bar, so I would call that a doji bar. And if the bulls see this bar, their entry bar, they're going to be disappointed. They don't want to see a bear bar. They don't want to see a bar closing below its midpoint. And that tells us that in this particular case, there probably were more sellers above the high of this bull flag than buyers. Bears will see that, and instead of buying this breakout, they'll sell it. The bears are betting that most breakout potential will fail, and that this is a fairly decent reversal after a small 2-bar breakout, and it's a bad-looking buy signal bar. At a minimum, it's possibly a reasonable scalp, betting that the breakout, the first reversal up from the pullback, will fail. Here we have a bull breakout, pullback will fail. Here we have a bull breakout, and an attempt to make the breakout fail. And when this bar going below the low of that bar, it triggers a failed bull breakout. A lot of traders will sell on the stop below that bear bar, betting that the bull breakout will fail and reverse down. So a lot of traders will sell that, betting that the bull breakout will fail. And remember, every reversal is a breakout of something. So we have a bear bar, and you should think of it as a breakout as well. If I were to draw a trend line up from the low of this bar to the high of this bar, it would be vertical. Or I could draw a trend line from the low of this bar to the high of that bar, and it would be a trend on a smaller time frame chart, and this bear bar is a reversal down. My point is that whenever I see a reversal down after a bull breakout, I think the reversal down is a bear breakout. I think of it that way. I think of it as if there was an obvious breakout here. Clearly there's not an obvious breakout here, but it's a reversal attempt, and I think of every reversal attempt as a break. Now, which breakout is stronger, the bull breakout or the bear breakout? Clearly, the bull breakout is stronger, and therefore it's not particularly high probability sell below that low. Bears will take the sell, taking a chance that will just keep going down, knowing that the probability is low, but the risk is low as well. They're putting a stop above the high of the bar or above the high of the bull breakout and taking a chance that it's the start of a big bear trend. Low probability, great risk reward. This bear bar might not be strong enough to reverse that, so there might be more buyers than sellers below this bar. And clearly, if you're a bear and you short it, you do not like the bull close. You do not like your entry bar failing to become a big bear bar closing on its low. So a lot of bears are disappointed. Bear trend tried to resume down again here, and they have a bear bar, but a much weaker bear bar, big tail on the bottom of the bar. So we had a bear bar here, tried to get a bear breakout, got a bull bar. We had another attempt at a bear breakout, could not close below the prior bar, just like this could not close below that bar. And here we have to close at or above the midpoint of the bar. So this is not a very good looking breakout. It's telling us that there might be more traders believing the opposite. So the bears sold, betting that the bull breakout will fail, but it looks like there probably were more bulls buying at the low of this bar, betting that the bear reversal would fail, which is logical because most reversals fail.
Usually more trader believe opposite and they're buying weak sell signal. Weak sell signal, most breakout attempt failed. So if this is a breakout and with the bad follow through, like this is strong, so got a high probability have the signal lay down, and after the signal lay down, the trend reversed. So we want to buy over here but not here because this is a bull bar and this is a bear bar.
Most breakouts fail, most reversals fail.
And this is a strong breakout, and after this breakout we got a bad follow through, and this is the bear. This is a bear try to reverse the market, but like after that the follow through is bad. This is telling that and this bear bar breakout, this bear breakout is weaker than this strong bull breakout, and then we can tell this bad follow through. And this is the first time bear tried to reverse the market, and it had probably like 80% chance it got failed, and it got bad follow through, and then because of this strong bear bar, so like we probably have the second leg down, and this is showing the second leg down. After this, one pullback, two pullback, and then we can over now or buy over here, set the buy limit over here, but like this is a not good signal bar. We can wait next bar, and then we can see if that is a good follow through bar or not, or we can see that is good signal bar or not. Like this is a good breakout, but like after we saw this bad fall through, this is the second time that this is the first time, like after the breakout, the first time bear market want to reverse the market.
Fail, which is logical because most reversals fail.
So in this one, 早安早安早安早安. Okay, so in this one, the trade by week high one, and this is the week high one. After that is pullback 1, pullback 2. You can say this is 2 because like if 1 pullback 2, yeah, 1 pullback 2, and actually this is a good high 2 by high 2 pullback. You can say that is a high 2 pullback, or that is a 1 high 2 pullback. It doesn't matter. So like this is a high 1 or high 2 bull flag. You can buy here, but after the buyer set the limit buy order, and he saw the bad follow through, and after he saw this one, and then he felt disappointed, or like the buyer, the buy signal over here when they're entering this trade and saw this kind of the bad follow through, and they were disappointed. And then when they disappoint, they try to reverse and try to break even, like they fail. And this is the give up bar. So whether this kind of the buyer or the buyer over here, they all saw the bad follow through, and then the market is probably get reversed down or get into the trading range, and this is the reason why.这边空头尝试反转，市场看低度明显比左边大多头，明显比左边大多头还弱。第一次尝试那个是有失败。第一次尝试。都明显比左边多头还弱。第一次尝试反转，会失败。会失败。Reverse down is bear breakout here. This is weaker than bull breakout. Trader sales fail. Bull breakout hoping for the reverse down. And usually more tradably opposite in are buying weak sell signal. And buying weak sell signal, buying usually more tradably opposite, and they're buying weak sell signal. Most breakout tend to fail. 空头防止反转市场突破一种突破尝试Okay.
Most breakouts fail, most reversals fail. Now, if a trader thinks that buyers will win above or below bar, he should buy. Look at this rally. We have 3 bull bars. Not great, big tails, but 2 of them closed well above the midpoint. This one has a pretty good sized buy and a close above the high of the prior bar, so there's a gap there. Is this going to be a failed bull breakout? It's a low probability short. There probably are more buyers at the low of this bar than there are sellers. So some bears will sell, looking for a move below here and a measurement down. But probably 3 consecutive bull bars, probably more buyers than sellers, so probably more traders would buy. However, because of the absence of big bull trend bars closing on their highs, we have prominent tails, a couple small bars, sellers will sell. Bull breakout, closed low. Look at this rally. We have 3 bull bars. Not great, big tails, but 2 of them closed well above the midpoint. This one has a pretty good sized body and a close above the high of the prior bar, so there's a gap there. Is this going to be a failed bull breakout? It's a low probability short.
Can you? It's probably short.
There probably are more buyers at the
probably got the more buyers
below this bar than there are sellers. So some bears will sell, looking for a move below here and a measurement down. But probably 3 consecutive bull bars, probably more buyers than sellers will, so probably more traders would buy. However, because of the absence of big bull trend bars closing on their highs, we have prominent tails, a couple small bars. The bulls know that there might be a deep pullback.
The bulls know that the weak pullback might have the deep pull. The weak breakout might have the deep pullback. Weak broke out might have the deep pullback.
And the trading range, so it's okay to buy.
And the trading range.
If you use the correct stop. Here, at this point, we have a pair of bull bars. This one closing on it.
Got the pairs of bull bar, bear bar, or bull bar.
It's high, and it's a higher low. This is a higher probability buy than there, but both are appropriate buys. So here, bulls thought pretty strong rally, probably buyers below. At this point, they see a higher low with 2 bull bars, and they're thinking that, well, there are probably buyers above this bar as well. So buyers below that bar and buyers above this bar. The seller, the exact opposite. If he thinks that the sellers will win, he should sell. So for example, he might say, oh, not a very good rally. The buy signal bar has a pretty prominent tail on top. We have a micro double top, up and down, up and down. Maybe we'll enter a tight trading range. Maybe I'll sell above the high of this bull bar. It has a fairly prominent tail, and I'll sell there. And maybe I'll sell below this bear bar. Now we have another version of a micro double top or a micro triple top. Up, down, up, down, up. And it's going down again with the bear bar closing on its low. It's a second entry sell for the fail.
This is second entry for sell.
Bull breakout. Bull breakout. First entry sell. Then we went up again. Now we have a better looking sell signal. That is a higher probability short than selling below that bar. So you have bears selling above this bar and selling below that bar. A lot of the time, if not most of the time, traders are fairly uncertain what to do. That's the nature of markets. They strive for confusion. And if at any time you're not sure, then just wait. Should you buy above this bar? Should you sell above this bar? Should you buy above this bar? Sell above this bar? Should you buy or sell below that bar? If you're not sure, best choice is wait. I mentioned examples of if you're not sure, best choice is wait. I mentioned examples of
If trader believe that buyer will win above, reach sell. So, 如果你还没有睡，就 should be.
Support and resistance that can lead to breakouts. It doesn't matter. No matter what type of breakout it is, break above prior high or low, a trend line, moving average, doesn't matter. All that matters is that there's a breakout. And a lot of times if you're beginner, you don't even see what's being broken out. But again, it doesn't matter if the breakout is strong enough, but you don't need to see or understand what's being broken. Remember, every trend bar is a breakout.
Every trend bar
Every
is a
series of
breakout.
trend bar
Every series trend bar is
a breakout.
a
And the
breakout.
bigger the bars, the more they close on their high. If we're talking about a bull breakout, the stronger the breakout.
And the biggest close in the highest,
And the more likely they'll be
and the breakout is stronger.
at least a two-legged move.
And when this breakout is stronger and this got the more probability got the second move up.
Here, streak versus up 1, 2, 3.
1, 2, 3.
And then we have a bear bar, so it's a breakout. It's
You got a bear bar and this is a breakout. And this is pretty strong, so it might be the second.
reversal. Every reversal is a break.
Every reversal is a breakout.
And then this is clearly a breakout.
And that
But a breakout
is
of what?
a breakout.
Of many things.
Of this high low, of this MA, of this bar, of this low, of this high
It's a
low.
wedge top, so it's a
The wedge top,
break below the bottom of the wedge.
bottom
It's a break
wedge,
below the trend line.
trend
Here we have a very
line.
big bull bar.
Oh, they got a trend line, and this is a
A lot of bulls will put their protective stop just below the small. So it's a breakout below the bottom of a very big bull bar, a black climax bar.
by climate. Aha.
Here we have a rally, not nearly as strong as the sell-off. And
Rally,
that follows through. We keep getting
50%
pullbacks.
rally.
Here we have a little triangle, a bull breakout above the triangle, reversing down. So this is basically a bear flag. So we have
Bear
a small
flag.
early bear trend, and we tested back.
1, pullback 2, pullback 3. 1, pullback 2, pullback 3.
Up. Traders will view it as a bear flag, and they'll look to sell.
Ah, shit, man. 忘了。最爱的故事。
Break out below the bear flag. They'll also look to sell, break out below this low, below that low, below the trend line at the bottom of the trend. You can see we're failing at the 60-minute moving average. This is a
60% moving average.
5-minute chart of the euro versus the dollar, and we're failing to break above the 60-minute moving average. We failed to get above it here, 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 and then here, and then here, and then we're starting to reverse down again. Bear breakout, try to reverse up, so small bear flag, and this is a breakout below.
And that is a bull flag, bear flag. That is bear flag. Yeah, that is a bear flag, and then that breakout up to this point.
Bear flag.
1 pullback, 2 pullback. Okay, so we can sell on this point. Though this is not a good signal bar, but like that is a bear bar. So at least we can sell here, and our stop limit is over here. It probably work because like 50% is over here, and our stop plus is over here. Yeah, stop loss.
Another small bear.
And this is strong, and that is stronger, so we probably got the second laid down, and that is the good one, and it probably got a second leg down, but that is failed. So like, you probably go to mission, get to this kind of series boss of the opposite mission move. It's probably over here, I guess.
Flag. Then at the bottom here, we have a spike.
And that is bottom here, and that is a spark. Oh, spike in channel.
Bottom.
Spike in channel, and that is the spike in channel. Oh.
We have breakout, spike, three.
So every time breakout.早安.
Which is 1, 2, 3, so small wait.
1, 2, 3, and then it's
one after a breakout. And then we're trying to reverse up again. Every bull bar is a trend bar.
And this is trying to reverse over here.
It's a breakout, it's a climb.
And that is a breakout.
Max, and this is a little bull breakout.
Climax? Okay, that is a climax because we thought every single trend bar is a climax, and every single trend bar is a breakout, and every single trend bar is a gap.
Above the top of it.
So actually, this top and this close, they got the gap. And the gap is probably close, but it still got a small gap.
Channel is tight like this. Probably even a strong reversal up like this is going to be minor, a bull leg in a trading range rather than the start of a bull.
And as you can tell, this is a trading range, and that is a strong
trend. That means that the rally probably has to test down. Here we got a higher low. The bulls
we got higher low.
Hoping for trend reversal, not like
the bull won't have in trend reversal.
The channel down is this tight.
But that is a tie. So the bull want to reverse all this trend. The probability is low, like reverse this kind of small swing high is okay.
You can see here we broke below that low.
You broke high and low.
But then we broke above this high.
And then we go this high.
Is a major lower high and the start of
no, because you got a bad follow through.
No, it's not a major lower high. It did not result in a strong reversal down. It did not result in a new low. So it's a minor lower high. A breakout.
It's a minor low high.
Above it probably will not get very far. And it did not. It
did not.
Reverse down on the next one.
Which
another leg down, another two-legged rally. Low.
Two-leg rally.
One, low.
One, followed by low two.
Two, so another bear flag.
And this strong rally probably got the second leg. And this is the second leg.
Break below the bear flag.
Break below the flag.
Then we have a double bottom.
Double bottom. Attempt.
We got a bear breakout.
Bear breakout. And come back. And that is AMD.
So that's a wedge. 3 pushes down.
3 pushes down. 1, 2, 3.
Every double bottom is 1 push, 2 pushes down. If the market breaks below it, that's a third.
And that is
a third push down. So even though it does not look like
it's not
a wedge, it's a wedge. And it's a nested wedge because it's within.
And 1, 2, 3. 1, 2, 3.
And a larger wedge. 1, 2, 3. Now we have a bull trend bar, so we're getting a
full trend bar.
Reversal up.
And it probably get to test this height.
And break up above a wedge bear channel. Trying to form a micro double bottom. Got a bear breakout. And then we have another attempt at the bottom. We broke below it.
Double bottom and break up.
Reverse up. At this point, pretty strong bull breakout.
Pretty strong bull breakout.
Well, above the moving average. There are gap bars here. Gaps between the lows of the bars and the moving average. And therefore, the sell-off that tests the low of the bear trend probably will be the final leg down before we get an attempt at a major trend reversal. And here we got a higher low major trend reversal in this.
Higher low trend reversal and the second leg down. Second leg up.
We got a
bull flag and break out the bull flag and test the 50%. And three push now. 1, 2, 3. No, that is a time channel.
Breakout and a pullback around 50%. Bull flag. The sell is weaker than the rally.
The sell is weaker than the rally.
And we have a wedge bottom, so probably 2.
And we got a wedge bottom. 1, 2, 3, and then breakout, test trend line, and we probably got the second layout.
There's up 1 pullback 2.
1 pullback 2.
And this is also higher.
And that is a also the higher major trend reversal.
Low major trend reversal. So bear channel, bull flag, we got a bull breakout. And we got breakouts of both minor and lower highs. A double top, but
and that is a breakout of the minor low high. Minor low high. Oh, because that is not the major low high. This is the major low high, and this is major low high, and this major low high is because I guess this is the major low high, because the market breakout, strong breakout, but that is not good.
tapped by the bears, double top.
You can see that might be. 波动尝试
Headline, bear breakout? No. We have a double top, and instead we
got double
a
top,
bull breakout.
and then we got a bull
We got a breakout above this high.
breakout this high,
Wedge rally.
the wedge rally. 1, 2, 3, 1, 2, 3.
Which is up 1, 2, 3. Other ways to count it, 1, 2, 3.
But that is a tight
3.
channel.
In any case, it's a bull channel, and this is a break below the bull.
That is a bull channel, and this is the trend line. And this breakout this bull trend line, and then this is strong, and the rally might be the final test of the period high.
Bull channel. Did not get very far. Now we have a bear channel, bull flag. This is a
Bull flag.
breakout above it.
Oh, breakout above it.
Not particularly strong. And we
Okay,
got another bull channel,
You got bull trend,
and we broke below it. We have an attempt at a higher low,
and we broke low,
and broke below it.
and it turned to the higher low.
I'm telling you that every trend bar, or series of trend bars, is a breakout. And a lot of times you look at the chart and say, I don't know what's being broken out. Well, there's something being broken out. This chart is an example of a lot of little things that are being broken out. I'm just trying to explain what a lot of the computers are seeing. Computers are looking for breakouts, and these are the kinds of things that different computers look for. Most of them are minor, and most of the breakout attempts fail. The kinds of things that different computers look for. Most of them are minor, and most of the breakout attempts fail. A breakout, it can be a single trend bar. There are many terms for the same thing. You can call this a strong trend.
OK， 我们可以再尝试看看解释一下这张图啊。OK， so first one. Okay, first of all, okay, that is wedge triangle, and we got 1, 2, 3 push up, and then that is a bull trend line, and then it break out this period high low. It break out this higher low. It's trying to break up this higher low and the trend line, and that is you might get the bear market, and this is 1 pullback, 2 pullback, 3, or you can say 1 pullback, 2 pullback, 3, and then 1, 2, 3, 3 times reverse again, and it fell, and it got a trend line, and it fell, and we can sell here, and our stop loss can put over here, and then the trade get down, the 1 pullback 2, and that is a high 1 entry. You can still get into the trend within the high 1 entry, and then this might be the pure higher low. Yeah, that is pure high low, and then that breakout. After the breakout, you got the wedge up, you got the stop, you got the bear flag, and 1 pullback, 2 pullback, and that is the second that is the second bear flag. That is a bear flag, second entry, and then this rally is strong and probably got second leg, and 1 pullback, 2. This is 1, and that is pullback. The pullback is just the bear flag, and that is the trend line. This is a trend line, and this breakout this kind of trend line, and this is the trend line because that is the downtrend, that is a Thai channel, that is a Thai bear channel, and that this is the spike in channel. And after this spike in channel hit up the market, we can see this is a breakout, this higher of the bar, and then you got a series bar, and then that is the first time the bear want to reverse the market, attempt to reverse the market, and that it failed. One pullback, and that is the first interest, and then we got the two. When we saw this kind of the bear bar, and we can say this is the bear bar. The board is disappointed. The board is disappointed, and the bear no, the board is not strong. That is the trading range, I guess. And this is the opening triangle, opposite triangle. This is the small trend range, because like this breakout, attempt fail, and the board tried to reverse the, and that is the first time. One pullback, two pullback. We can trade over here, and after this bear bar we can get out, because like the bull bear tried to maintain the original market trend, but it failed. And after this bear bar we can try to sell, not sell over here but over here, because like that is just doji. The bear tried to reverse, but we got still on the 50% pullback, so actually we can say that is the first one pullback, two pullback, and the market reversed, and the market maintained the original trend. And after saw this kind of the bear bar, we know that this might be a downtrend, and we can sell it over here or sell the closed. And after we sell, we got good follow through, and then keep going, get down. After this bar, we know these probably got some buy pressure over here, and then the price get down and get up. After they get up, we can draw this kind of the trailing line, and then the market get up and try to reverse, but like we got a 50% of the pullback, and then one pullback, two, so we can enter it over here again, but I will subload this over here. And after the breakout over here, we can move our stop loss over here, and actually our target is the major move from here to here, so like it's probably get lower, so this we probably cannot make any money, because the first time we get into here and the second time we get into here, but like we'll break even over here, we might lose some money, or we can get out over here or here. Yeah, and then the market reverse. So this bear flag, and it got breakout, and this is the one pullback, two pullback, that is the double bottom, and this is the double bottom, and this is the bull market tried to reverse the market, but like it failed, and the third time to attempt, and it succeed, and we got a 1, 2, 3 push down, and 1, 2, 3 we got the double push down, which I'm gonna trend line over here, and the trend over here, they break out this kind of the trend line, and then one pullback, 2 pullback, 3, and that is the support, and the market get down to break out this support and get follow through, and it might be the 50% of the pullback. You got a 50% of the pullback, and then the revenue 1 pullback, 2 pullback, 3, and then the revenue you go reverse, the bull reverse the bear market, and then they got the bull flag, and then the market break out the bull flag and the major higher low in a low time frame. You got the major higher low, and this is the higher high. This is higher high compared to this one, but like this is a breakout compared to this higher high. But after break out this higher high, the trend reversed at this point, and then it break out the opposite trend of this higher high, and then the market get up. We got the trend line over here, but that is not a good one. And we got a trend line over here. So actually this bear bot is not only break out this EMA 5 minutes 20 EMA, but also break out this kind of the trend line, and that is a bear flag. That is a bear flag, and this breakout is break out this kind of the bear bull flag, and that is a bull flag. That is bull flag too. And the strong breakout, it might be the second leg up, like this one might be the second leg up, or like this one, and or like this one. And this one is the strongest breakout, and after the bull flag, and this might be the second leg up, and this bear flag, that is a bull flag, and this is the second leg up, but the second leg up is testing the 60 minutes trend line, and it failed, and then it get down 1 pullback 2, and that bear bot is very big, so we might get out over here. 1 pullback 2, we might get out over here. 1 pullback 2, and we can sell over here. Yeah. Okay.
And strong trend bar, strong series of trend bars, a breakout, a spike, a climax, a gap, a reversal. This could be a reversal going down here and then up here. It's all the same thing. Those are all synonyms for trend bars. This is a bull trend bar. Now, which term I use depends on what took place over here to the left. If the market was selling off and reversed up, I would call this a reversal. It's still a buy climax, it's still a bull breakout, it's still a spike, probably some kind of a gap between this close and something, the high maybe of the prior bar. But all that really is important is it's a bull trend bar, and so it's a breakout. Even if you don't know what's being broken out, you see a bull trend bar, it's a breakout. Consecutive bull trend bars, it's a breakout. It's a stronger breakout because not only do we have higher price, we have more time. The market has been breaking out for a longer period of time. 3 consecutive bull trend bars. Now we have 3 consecutive bull trend bars, even a strong breakout. The reversal down, probably minor. It's big enough down, so we have a big up, big down reversal. Probably have to go sideways for a few bars. But this chart is still always in long. Every breakout, no matter how strong, eventually tries to reverse, but most reversal attempts fail. I've said a couple times today that every reversal is a breakout. Again, a lot of times it doesn't look like a breakout, it just looks like a reversal. And it doesn't matter if you call it a reversal or a breakout, there is a breakout there. Here we have a bear trend bar, so immediately think breakout. What did it break below? No, it broke below this 3-bar bull channel, it broke below this bar. Does not matter. Anytime I see a big trend bar, a bear trend bar, I think breakout. And again, the choice of the term depends on what took place to the left. Here we were rallying, now we have a big bear trend bar.
We got a rally, and then we got The trend
So I would refer to that as a reversal,
and that is
but it's
a
still a
reversal,
breakout.
but it's a breakout.
We have a bull breakout, and this represents a
Fail.
failed bull breakout. Whether that will lead to a trend or a trading range, or a pause in the trend and a bull flag and trend resumption up, it's too early to tell. But it's a bear reversal, it's a failed bull breakout. I've made this point many times throughout the course. The breakouts are common.
A breakout is coming.
Every trend bar, every series of trend bars is a break. Lots of bull breakouts. This is a big bull breakout made up of many smaller bull breakouts.
Big breakout.
Bear breakout, other
Bear
bear, breakouts,
breakout.
2
Bear
bars,
breakout.
some with more. Here's 3 bars. Do I count that as part of the breakout? I
Nope.
typically do not. I think that's a pause bar, and then we
Pause.
write it down, so we call that the breakout. The markets have inertia. That is
Markets have inertia.
my 80% rule. And by inertia, what I mean is the market tends to continue to do what it has been doing. So anytime I see a breakout like this, I look to the left.
That is a training
Trading
range.
range. Chances are the breakout will fail, or eventually fail. If I'm looking at a reasonably
That is triangle.
strong rally, and I see a breakout here, chances are we're going to get some follow through buying. Because bars to the left, we've had 7 bars up, 7 bull bars. Now every tail on every bar is a breakout.
Every tail, every bar is a breakout.
This tail below, at one point this was a bear trend bar with a close down here, but by the time the bar actually closed to became a bull bar. The market traded below this level. We have a bear trend,
Bear
small rally,
trend.
bear flag. And it was a break below the bear flag, and
Break low, bear flag,
it failed.
and fail. And that is the outside bar. So we can enter the long on this here.
Now we have a
can
look to
buy
bear
here.
flag.
And that is the outside bar. And there's a no, that is not. And that is outside bar, and we can go to the
And
here.
these bars all have tails below. That means they all represent failed breakouts.
Hmm.
Tails
And 50%, 50%.
the tops of bars failed.
Tops of bar. That is the breakout. fail.
The bull breakouts.
Bull breakout fail.
We have a bull flag.
Bull flag 1, pullback 2, and that's it. And 1, and that is 2.
We try to break out, fail. Try to break out, fail. So every tail is
a
failed breakout.
Is a failed breakout attempt.
Trading range breakouts, like I said, the market.
市场是有惯性的。市场有惯性。
Have inertia, and if the market has been going sideways, chances are it'll continue to go sideways, and 80% of attempts to have it break out into a trend will fail. 5-minute chart, euro versus the yen, up and down repeatedly. Here we have a decent bear bar, follow through at the bottom of the range at a prior.
Good.
Well, we reverse up.
Good.
Here we have a bull breakout to a new high.
Bull breakout to a new high, but fell. The follow through is bad, and it fell.
The strong bull bars trap.
The strong bull bar trap.
Traders into buying high. Bulls are hopeful. Like
this is good. This is a good breakout, and it probably got the second layup. So 1 pullback, and then the market just reversed. But whatever we got buy over here, our stop loss is over here. So that is highest. We need to attempt the trend is gonna break out of this trend range, but 80% of the breakout 80% breakout of the trend range might fail because the market have the inertia. 80% of the breakout attempt will fail. So that is not good. Not good one. But after the market get up like breakout of this point, we can move our stop loss over here, and then we saw the bad follow through, and then we can say, okay, next time when the market is go back to our breakout point, this or here, and we get out. So we still got this here to here profit.
you see a bar like this, you say, oh wow,
It's kind of good.
this is clearly
it's kind of good.
the end of the trading range in the start of the bull trend. Well, it's not. Most trading range breakouts fail, even very strong ones like this.
Even very strong like this,
Like that. Beginners tend to buy these bull closes.
and that might be the second leg trap of the trading range, because at this point that is the fail, and they probably go to the AMD and they go over here, but didn't sweat up this liquidity. Not liquidity, didn't go over here, the bottom of the trading range, but after it, we can say 1 pullback, 2, and at the second pullback, that is the trap of the second leg trap, because that is in the trading range, and then we can redraw the trading range from here to here, and then we can tell that 1 pullback, 2, and that might be the second trap. So that if that is the second trap, we are looking for the buy signal, and we saw this type of button, because some people are going to sell this close and get trapped. When they get trapped, they want to break even, and when they want to break even, the price is get down twice, and they got the support. They got the support because some bull bull market or thought the breakout will fail, and then that is the fail breakout attempt, and the market to get back, and the sell want to break even. So got the pressure, and then 1, 2, 3. No, 1, 2, 3, or 1, 2, 3. I don't think
Betting on a successful breakout, forgetting my 80% rule that most fail. Smart bears, what they do is when they start to see strong bull bars, big bull trend bars near the top of the range, they look to sell. They can either sell with stops on a reversal down, like below that bar, below this bar, or a lot of them will look at strong bull closes and sell the market. So as soon as that bar closes, they sell the market and they get filled when they open the next bar. Every breakout is a climax, and that's at the top, and the sell climax at the bottom. And 80% of those breakouts will lead to reversals. And a reversal is simply a trend bar in the opposite direction, which is a breakout. I said bears will sell strong bull closes near the top. They'll also sell reversals down, which is slightly higher. Probability than selling the bull closes. A pair of very strong bear bars at the bottom, terrible follow through. Another bear breakout attempt, another one, and they're all failing. Very strong bear bar closing far below this bar, but still within the trading range. Bars like that trap traders into selling low. Traders are naturally hopeful, and they're thinking, wow, that's so strong. This has got to be the start of a bear trend. And look at this, we've got an extremely strong bull bar, and now we're breaking below that bar. So certainly this will end up as a measuring gap and lead to a big move down. Well, it did not break below the trading range, and the next bar has a bull body. Chances are this bear breakout will not get very far. And the bulls know that. So every time they see a big bear bar closing near the bottom, well, they're going to be buying those bear closes, betting that the 80% rule will apply. That bear breakouts will fail. Every big bear bar that looks like a strong breakout and the start of a bear trend, they buy. They bet that 80% of the time those breakouts will fail. Other bulls prefer to buy reversals up, so they'll buy after the breakout reverses up above bull bars here, 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 and here. I began talking about what exactly I mean by breakout. I then moved on to my 80% rule, that 80% of breakout attempts will fail. Next, I made a point that every reversal is a breakout in the opposite direction. I may not call it a reversal, and I may not call it an opposite breakout. I typically call it a reversal, but it is a breakout, even though it may not be obvious on the time frame in front of you. And
在学价格的基础行为，在学价格基础的价格行为 price action.
Finally, because of the 80% rule, if the market's in a trading range, it does not matter how strong the bull bars are at the top or how strong the bear bars are at the bottom. The breakouts are probably going to fail, so traders buy low, they sell high, and since they expect the trading range to continue, they scalp, they take big profits. I'm Al Brooks. Thank you for watching the Brooks Trading Course.
Price action, price action. 早安，早安，早安，早安。这是 price action。
Hello。
trading course.
You're
This is the second
welcome.
of 8 videos on breakouts.
Okay.
An important point then.
Need follow through. Okay. So that is second point 2. Point B.需要跟随。Trend always try to reverse. 总是尝试反转。Can begin small. 要从小 K 先开始。
All traders should understand is that for breakouts to be successful, they need follow through. Instead of a reversal.
Not the reversal.
The next bar. Trends are always trying to reverse.
Always try to reverse.
But if they have good follow through,
but they have the good follow through.
Chances are they will continue at least a little bit further.
But they got a good follow through. It might be a more probability to got the second move up.
The final point I want to make is that breakouts can begin as small bars or series of small bars. They do not have to begin with a big trend bar. After every breakout, traders like to see confirmation. Here we have a bull channel, bear flag. I think every bull channel is a bear flag, every bear channel is a bull flag. In other words, a bull channel, chances are, is going to get a bear breakout. Well, here's a bear breakout. If it's only a single bear bar, chances are it's not going to lead to reversal. It'll probably lead to a trading range, maybe another leg up. So the more consecutive bear bars, the bigger the bear bars, the more they close on their lows, the more likely this is going to lead to a swing down. Next bar, this is the follow-through bar. The first bar is the breakout bar, and the next bar is the follow-through bar. Sometimes the follow-through bar can be the second or third or fourth bar. In any case, with a strong follow-through bar like this, bear bar closing on its low, close below the low of that bar, consecutive bear bars closing on their lows, decent-sized bodies, it increases the chances that this is measuring gap and that it will lead to a measured move down from this high breakout point, and it fell more than a measured move down. On the other hand, here's another attempt at a bear breakout. We have an attempt here. We have another attempt here. We have a full trend. So we have a spike, a small channel, and we have a bear breakout. But a couple problems with it. Tail on the bottom of the bar. And look at the follow-through bar. It's a reversal bar. This bar, tail on the bottom, not especially a big bear bar, and close at this low instead of far below that low. So the bear breakout is not very strong. And the next bar is a big bull bar closing on its high. So it's totally reversing the bear breakout. Now remember I said that anytime I see a trend bar, up or down, I think of it as a breakout. And you can call this a breakout, or you can call it a failed bear reversal. Breakout of what? A bull flag. It's a high one bull flag. We trend it up, we pull back, and this is a high one buy signal, and we trade it above it. And some bulls will buy here, other bulls will buy above a bull bar. So 2 bar reversal, down, up, and then they'll buy here. Main point, bear breakout, terrible follow through, unlikely to go down here. Bear breakout, good follow through, probably get at least some follow through selling. Yeah, some bears are sold with slows, and not a high probability sell, but probably good risk reward. Maybe they put their stop above the bear bar, maybe above this, hoping for a huge move down. So big reward, not big risk. But whenever you have great risk reward, you have terrible probability. With this close at this low instead of below the low, and with no follow through bear bar yet, the probability of selling this close is low. Whenever you get these bear breakouts like this and like this, low probability to sell here. But once you get a strong follow through bar, it confirms the breakout and it increases the probability that prices will continue down. Here we have a bear breakout and terrible follow through bar. Instead, we got a good reversal up. A lot of bulls, when they see a bar like this, knowing that the bears need a strong follow through bar, they bet against it. Most reversals fail. We have a bull trend, most reversals fail. And most breakouts fail, trying to break below a bull trend line. Some bulls will buy that close, betting that the next bar will not be another bear bar. So the bulls buy that close, betting that the bears will not get their follow through bar. Some bulls bought this close, the bears got their follow through bar, and a lot of the bulls who bought that close exited here. And they're not going to buy again for at least several bars. That means no buyers immediately below, and the market has to go lower to find buyers. Bear breakout, the bulls know the bears need one more bar, the bulls will buy that close. And if the bears get their second bar, as they did here, the bulls will take their loss. They'll sell out with a loss. Whenever there's any kind of a breakout, traders want to see confirmation. Bear breakout, confirmation increases the probability we're going lower. Bear breakout, no confirmation. Here we got a bull breakout. New high above this, new high above that. And look at the confirmation. Bad confirmation, no confirmation. It's an attempt at a reversal instead of a strong follow through bar. Bull breakout, and then you get a bear bar. It's a failed bull breakout. Bear breakout, followed by a bull bar, is a failed bear breakout. Strong trends are always trying to reverse.
它如果今天要往下的话，那它就需要一个什么？是当掉了，它就需要一个。Different personality， 我在这等你前浪的玩游戏。请问教练，
But probably good risk reward. Maybe they put their stop above the bear bar, maybe above this, hoping for so the bull immediately bull. It's a failed bull breakout. Bear breakout, followed by bull bar, is a failed bear breakout. Strong trends are always trying to reverse. Here we have 10 or 15 bars below the moving average. We have 5 consecutive bear bars here, and then these 9 bars here, we only have 1 bull bar. Bull's trying to reverse up again.
1回调2回调。
Decent bull bar, closing above the high this bar, and closing above the high, maybe 6 or 7 bar.
但这边是 EMA， 看一下有没有。
But that's the breakout bar. The bulls need at least 1 more bull bar to convince traders that they have taken control. What do bears do? They sell that close. Also, anytime the market's in a bear trend below the moving average, and there's a bull bar closing near the moving average, bears sell the close. They sell that close. They sell the close of any strong bull bar at the moving average, betting that 80% of trend reversal attempts will fail. So chances are this bull breakout will fail, and the next bar, instead of being another bull bar, follow through bar, it'll be reversal. Whenever you look at a reversal, you think, gosh, I think the bulls need 1 more bar. Well, bears will sell that close, betting that the bulls will not get their 1 more bar, and that the bear trend will zoom down. Same thing.
You make me want a different personality.
Here, big bull bar near the moving average. Most bull reversal attempts will fail in a reasonably strong bear trend. Fairly tight bear channel.
Very tight bear channel. 1 pullback, 1 pullback 2, 1 pullback 2, pullback 2.
Holding below the moving average. I would rather sell the close.
1 pullback 2.
Close of that bull bar, then buy the close. I would bet against the bulls getting their follow through bar. Same here, same here. What about here? We're finally above the moving average. We have a bull breakout above the high of the past 30 bars maybe. And we have a bull follow through bar. Well, bears would sell that one as well, arguing, no, bull breakout, but look at the rally. Where are the consecutive big bull bars? Here we have consecutive bull bars, but they're not especially big. So this entire rally is probably a bull leg in a trading range. Bear trend lasting 50 or 60 bars. Gap bars. The gap between the low of this bar and the moving average. Gap bars here. Usually gap bars mean the market will have at least one more leg down. They're a sign of
说哪个？什么东西？股股干嘛？看它会不会走出去。你来。
要不要先下去啊？
好，马上下去。我放在忙上。
然后帮我拿那个灰色外套，
哪里？
在床头。
好。大件的吗？
对。今天会很冷吗？
还好吧，我不知道，你要看气象报告啊。早上比较冷。密度没有平时啊。什么也没带，包包呢？你的衣服顺便拿。都走过来了。门关了吗？拜。拜拜。拜拜。是个坏人。
But the bulls becoming stronger. The bulls are strong enough to put bars completely above the moving average. But when you're in a bear trend, the first time the bulls do anything, bears sell it. So the first time you get a big bull bar, the bears sell. First time you touch the moving average, they sell. They were willing to sell below an average price for all of these bars, and now they finally get a chance to sell at the average price. They're going to sell. First time the market creates gap bars, bears will sell, betting that the reversal attempt will fail. Other bears, instead of selling strong bull closes, they wait for reversals down. We have a bear trend, leg one, pullback leg two, bear bar closing on its low. They'll sell below that bar, stop up here, they'll sell.
都给你，你确定？这个你给我看。哪一个？这个什么棉被，那个什么椅子的被子那些啊。嗯。拜拜。拜。1分半怎么了地？我在这等候你，却躺在玩游戏。请问导演？是个坏人，给你，你确定？ You make me wanna deep and person now. Let me， 我在这等候。你却躺在玩游戏。请问导演，爱是个坏人。
Below this bar, stop up here. bulls try to reverse up, bears resume down, so they'll sell below the bull bar. Or below the bear bar. Some traders prefer stop entries, selling below bars. Once the reversal attempt fails. Same thing here. Bears getting a breakout, but they probably need one more bar. We broke below the moving average. We broke below the prior bar. We broke below this double bottom. But close at these lows instead of far below. Close off the low of the bar, not all that far below the moving average. And we're still holding above the bottom of the bull trend. If you're a trader and you're looking at that, what's more likely, that we're going to continue down or that this bear breakout attempt will fail? Probably will fail. Because of that, as soon as the bulls see this close, they hit buy the market. So they get filled either right on the close of the bar, if they buy right before the bar closes, or they get filled on the open of the next bar, betting that the breakout will fail, and that maybe we're getting a higher low major trend reversal. Bull breakout, two legged pullback, so a large high two buy, like one pullback, like two. And the bulls who did take that bet, betting the bears would not get good follow through, they won. Above the moving average for 10 or 15 bars, above a bull flag, bear channel, bull flag. Guess what happens when you get a bear reversal bar near the moving average? The opposite of what I talked about in the bear trend. The bulls will look at that and say, ha, I don't believe it. Most reversal attempts fail. I'm going to buy any big bear bar closing near the moving average. I'll buy that, and I'll buy that, I'll buy that. Because the bears need one more bar to convince traders that the bears have taken control. Because of that, bulls buy those bear bars, betting that instead of a second bear bar, the market will resume back up. Trends constantly try to reverse, but my 80% rule, 80% of reversal attempts fail and become flags. And then the trend resumes.
这里没有，没有来。来。
Strong bull trend. Look at all the reversal attempts. Pretty decent bear bars all the way up. But a reversal attempt needs follow through, and the bears are not getting their follow through. Without that follow through, nobody believes the reversal attempt will succeed. Typically, at a minimum, traders want to see a bear bar following the breakout. They want this bar at a minimum to be a bear bar. And here we could not even get that. Ideally, what the bears want is a second bear bar. They want a big bear bar. They want the bar closing on its low. And then they want a third, fourth, fifth bear bar. But here we got a bear breakout, terrible follow through. Bear breakout, terrible follow through on the next bar. The bulls see every one of these breakout attempts as the end of a bull flag. So bull trend, bear channel, bull flag. So they look to buy a reversal up. Bear breakout, bull flag. Sideways, bull flag. Pullback, bull flag. The bears see reversals, the bulls see bull flag. The bulls are looking to buy reversals up. Buying these bear closes, slightly lower probability than buying above the bull bar on the reversal up. So the market order has a lower probability of success than the stop order. But the risk is less as well. The bears are hoping for a follow-through bar. The bulls buy that bear close. And if the bears get their follow-through bar, the bulls exit. So the bulls in general are risking one bar. So aggressive bulls buy the closes, betting that the bears will fail to get their follow-through selling. And other bulls who want slightly higher probability, they're willing to pay for it with slightly greater risk to stop being further away, but it's still just as valid as taking a more aggressive buy at the bear close. One has better probability with worse risk reward, the other has better risk reward and lower probability. A chart is made up of price and time axes, and sometimes a trend can begin more with time than with price. So sometimes a breakout can be small, but it can still lead to a big trend. So here we have a wedge bottom bear channel. Think of it as a bull flag.
Wedge bottom 1, 2, 3, 1, 2, 3, down.
75% chance we're going to get a bull breakout. Well, this is the bull breakout, and at this point it does not look remarkable, but this is what followed. So a lot of times even a single bull bar can be the start of a big trend. So we got a bull bar. We got a follow-through bar here, good for the bulls, but it's just a doji. It really didn't get clear until here, where we had a pair of consecutive bull bars closing near their highs. But in any case, a big bull trend can begin with a very small trend. Sometimes a single bull trend bar can be the start of a trend, and then sometimes a series of bull trend bars can be the start of a trend. Look at this. From this bar to that bar, no pullback, so it's about a 10 bar bull micro channel. On a higher time frame chart, this entire rally is a breakout. So So if this is a 15-minute chart, on a 60-minute chart, or a 2-hour chart, or a 3-hour chart, it would simply be 1, 2, or 3 big bull bars closing on the highs. Sometimes a single bull bar can be the start of a breakout. Sometimes a series of bull bars can be the start of a breakout. All trends are in channels. This is a very tight bull channel, but this bull trend is in a channel. This is, on the left, a bear channel. Now, all reversals are breakouts. Here we have a small bull reversal. And is it a breakout? Well, it is. It's a break above the bear trend line, so it's a break above the channel. There's also a wedge bottom, or you can say a double bottom, or a failed breakout, which is a type of wedge bottom. So every reversal is a breakout of something, even if it's not clear. When you get follow-through buying like this, I view this as a give up series of bars. The bears are giving up. What happens is you get bears who doubt the bull breakout will succeed, and they sell. And they sell more higher. And at some point, they conclude that they're going to lose money, so they give up. And this pair of bull bars, consecutive bull bars, gap below that bar, the high of this bar. This is probably the give up bar, where the bears gave up, they bought back the shorts. And it's also probably where the bulls who are waiting for high probability bought. You have bulls buying here, and you have bears buying here, and both are buying aggressively. The bears are desperate to get out of their losing trade before the loss becomes too big. And the bulls at this point realize the market has a high probability of going higher, so they're buying aggressively, and this is what followed. They created a big bull breakout. Give up bars, the bears finally giving up, taking their losses. And the bulls know the bears are doing that, and the bulls buy aggressively because they know if the bears are buying back their shorts, the bears are not going to sell again 1 or 2 bars later. They'll wait for at least several bars, so it's a high probability buy. 60% or higher, but they'll wait bulls for the loss probability. This is food. When you get follow-through buying like this, I view this as a give up series of bars. The bears are giving up. What happens is you get bears who doubt the bull breakout will succeed, and they sell. And they sell more higher. And at some point, they conclude that they're going to lose money, so they give up. And this pair of bull bars, consecutive bull bars, gap below that bar, the high of this bar. This is probably the give up bar, where the bears gave up, they bought back their shorts. And it's also probably where the bulls who are waiting for high probability bought. You have bulls buying here, and you have bears buying here, and both are buying aggressively. The bears are desperate to get out of their losing trade before the loss becomes too big. And the bulls at this point realize the market has a high probability of going higher, so they're buying aggressively, and this is what followed. They created a big bull breakout. Give up bars, the bears finally giving up, taking their losses. And the bulls know the bears are doing that, and the bulls buy aggressively
because by bear giving out and bulls buying.
They know if the bears are buying back their shorts, the bears are not going to sell again 1 or 2 bars later. They'll wait for at least several bars, so it's a high probability buy.
Both bull and bear believe probability of higher prices
60% or higher, that there'll be at least some kind of a measured move up. Maybe a measured move based upon the height of this trading range. It obviously is much higher than that. But the context is good for the bulls, and they have a good breakout and good follow-through bar. Chances are 60%. We're going up for some kind of a measured move. Stocks, here's Amazon, daily chart of Amazon, often have big gaps on the open. This day opened far below that day. You can see there's just gaps in many different places on the chart. Every gap is a breakout, and it can succeed or fail. So here we have a big gap down, and it ultimately reversed up. Here we have a big gap down, ultimately reversed up. Here we have a small gap up, reverse down. So any gap, like any other type of breakout, can succeed or fail, and traders look at the price action and try to determine what is more likely, a successful breakout and a new trend, or a failed breakout. On Forex charts, gaps are much less common, and they're, in general, not particularly important. Sometimes they are, but for the most part, they're not. So a big gap down below yesterday's low. Today's opens down here, and that's yesterday's low. Big gap down, and it failed. The stronger a breakout is, the more likely it's going to lead to a trend. Here we have a pair of small bull bars, not particularly strong. And then we have a bigger bull bar closing near its high. And we have gaps. This closed above that high, this closed above that high, and this closed way above this high, so the trend is getting stronger. And the entire 3 bars is also a breakout. This is a breakout, this is a breakout. This is another stronger breakout, and the 3 bars, some computers look at the entire 3 bars as a breakout. And here's the follow-through bar. The minimum that the bulls want to see is the absence of a bear body. And they got it, they got a bull body. That increases the chances that we'll go higher, even if we pull back first. They got additional follow-through buying here, and then continued follow-through buying for the next 20 bars. They got additional follow-through buying here, and then continued follow-through buying for the next 20 bars. One big disadvantage of breakouts is the stop is usually far away. I said the probability of making money is high if you're buying a strong breakout like this. Earnings, buy closes, buy the market. Probability of getting some kind of a measured move up is 60% or higher. So what's wrong with the trade? Well, the stop is far away. Anytime you have a high probability trade, you're going to have bad risk reward. Usually that means big risk. The stop is far away. Also, the market suddenly is moving quickly, and unless you've traded a long time, it can be very difficult emotionally. You think, my gosh, I don't know what to do. I'm afraid this is moving so fast. Maybe it'll move just as fast back down. Traders get paralyzed by fear. One of the important things in this course that I talk about all the time is that you're always looking for reasons to trade. There's lots of trading taking place on every bar and every chart. But a lot of times, you don't know what to do. Do I buy at the market? Well, it's good to have behaviors that are fairly easy to execute. And here, this is a good buy to close bull trend. So as soon as you see a bull close, you can buy it. If you did not buy that one. If you see another one, buy. If you did not take those two and you see a third one, just hit buy the market. You put your stop in the right place. Since your risk is big, you have to trade small. If you're starting out, you'll get this now. Al's giving me good advice. I just buy these closes with my stop down here, and 60% chance I'm going to get a measured move up. So if I buy here, here's my risk, 60% chance we're going higher. If I buy here, here's my risk, 60% chance we'll get to a measured move based upon this close. Every step of the way. If you buy here, 60% chance it'll go for a measured move. If you buy here, the breakout's even bigger, so now the target is even higher. If you buy here, the risk is bigger, it's a logical buy, chances are the target now is even higher. And it looks easy to do, right, but it's hard to do emotionally. It takes a while to get used to it. And the most important thing is to trade the I don't care size. You trade small enough so that you truly do not care if you lose. I always talk about risk. Risk usually means price, dollars, but a component of that can be time. If you feel rushed into making a decision and it interferes with your ability to make a decision, that is risk. So if you feel pressured, you think that the chance of making a bad decision is higher, that is risk. Now let's say you buy for any reason. Where do you exit? Well, as long as your premise is still valid, you can just keep holding. Some traders will exit and they'll just scalp, and buy again, scalp, buy again, and scalp. But most traders cannot get back in once they get out. So whenever you have a strong breakout, it's usually better just to put the appropriate stop down there and wait until the trend is no longer a trend. Wait until your premise looks like it's no longer valid, and then get out. I said you can buy for any reason. You can buy at the market. You can buy a bull breakout. You can buy a follow-through bar. You can buy more follow-through. You can buy with a limit order at the low of this bar, betting the reversal of 10 will fail. You can buy with stops above these bars. Does not matter. But because the stop is far away, you have to trade small. And a strong bull trend has a high probability of continuing up. So the later you enter, the higher up you're being forced to buy. You always have to be thinking out your position size. You have to adjust it based upon your stop. If you're thinking also that, hey, I'm going to buy this close, and if it drops all the way down here, I'm going to buy more, then you have to do the math and pick a position size that's small enough so that if you buy and buy more lower and get stopped out, you do not lose more than on any other trade. And profit target, high probability trade, all you need is a reward equal to 1 times your actual risk. Your initial risk is here. But if you bought here, high probability trade, all you need is a reward equal to 1 times your actual risk. Your initial risk is here. But if you bought here, the market kept going up, your initial risk was just a tiny bit. Do you get out that tiny bit higher? No, because there's always a minimum. So in the Forex market, you never want to take less than a 10-pip profit on a 5-minute chart. And in the E-mini, you never want to get out with less than a point. But again, when you have a 60% chance of a measured move up, I would not on a 5-minute chart. And in the E-mini, you never want to get out with less than a point. But again, when you have a 60% chance of a measured move up, I would not recommend scalping. Unless you're really good at getting back in, I would just buy and hold. In this video, I talked about the importance of follow-through after a breakout. If the follow-through bar is in the same direction as the breakout bar, higher probability the trend will continue at least a little bit. Because trends are always trying to reverse, traders will bet that the reversals will fail. So if you have a bull trend and then a bear bar, bulls will buy that bear close. If you have a bear trend and a bull bar, traders will sell that close. Finally, breakouts can be small. They can be as small as a single small bear bar or bull bar. And they can also be large. They can also be made up of many small bars. They come in many different types. I'm Al Brooks. Thank you for watching.
Different personality， 我在这等候，你却躺在玩游戏。请问导演，嘟嘟嘟嘟嘟嘟都是个坏人，都给你，你确定？ You make me want a different personality。 我在这等候，你却躺在玩游戏。请问导演，嘟嘟嘟嘟嘟是个坏人，都给你，你确定？ You make me want a different personality。 我在这等候，你却躺在玩游戏。请问导演，不是个坏人，都给你。 可能我忘了，我不敢接起你的电话。I felt a lonely sigh， 请别再把我的梦想给打开。Different personality， 我在这等候，你却躺 习，请问导演，他是个坏人，都给你，对自己。Different personality， 我在这等候，你却让在玩游戏。请问导演，不论是人还是个坏人，都给你。我这样做的对自己。
OK，那我们今天邀请到的原子。
错位，在荒野漂流，漂流的尽头，就是你带的宽容，你眼底的温柔，也为我保留心的寄托。我们都曾有过风过雨后的沉重。
It's well done. And he was dealing with some mic issues there. He fought through it. That's dealing with adversity. He did it gracefully. It was nicely done. I just love that he's so unserious. Steph loved it too. I just love that he's so unserious. Even Will Hardy's. Yeah. But what he's liking is that he gets about ism, and the coach's challenge is unsuccessful.
主动道歉了就还是好孩子。弗拉格持球，阿门换防过来紧逼防守，然后弗拉格就掉球了，阿门捡球下快攻，结果直接摔倒了。回放可以看到弗拉格掉球之后用脚绊了一下阿门，然后裁判给了一记恶意犯规。随后弗拉格主动道歉了，就还是好孩子。弗拉格持球，阿门换防过来紧逼防守，然后
I'll make it work. I'll make it work. This is for you, Ray. This is for you. Invisibility. Never gonna know. He's never gonna notice you come. Invisibility. He's won. It's too good. This rat I'm standing on top is too good. Invisibility. Why were you suicidal? Why would you hurt yourself? Is it the red shoes? What? Is it the red shoes? No. Are you sure? Because they're fucking red. You smile like that too much, you don't want to stick around. You're so hard on yourself. I love that you have such high standards, but those aren't high standards, that's called perfection. And most people overestimate what they can do in a year. They underestimate what they can do in 2 or 3 decades.
Wow.
Al Brooks. Thank you for watching Brooks Trading Course.
You're
This is the
welcome.
third of 8 videos on breakouts. I'm going to be talking about one of the important characteristics of a strong breakout.
Breakout usually has second leg. 终于突破第二段行情，第二段 breakout usually got the second leg in trading range breakout. 条区间的 U， 我在这儿。我要去如厕。
and that is that there usually is at least a second leg. Sometimes there is more. Finally, I'll talk about trading range breakouts, successful trading range breakouts. Look at this chart. Here we have a series of bear bars. It's a bear flag. Odds are the breakout will be to the downside. So traders will sell below the prior bar. They'll sell with a stop below that bar. They'll sell at the market, betting that the bull reversal attempt will fail. If you have a bear trend and then a small pullback like this, a bear flag, the probability is you get the bear breakout. So if you get a bull breakout, that's a surprise. It's a low probability event. And here we're getting a bull breakout. Traders expected the opposite. They expected a bear breakout, and instead they got a bull breakout. So traders are trapped in and out. Bears are trapped in. They've been selling here, betting on the second leg down. And bulls were trapped out. It was a low probability buy, so they did not buy above the highs of these bars. And look at the bull bodies. Small, smaller, non-existent. So they were not even buying closes. Yet, we got the bull breakout. Bears are trapped into a bad trade. Bulls are trapped out of a good rally. Bulls are hoping for any kind of a pullback to buy. The bears want a pullback so they can buy back their losing shorts with a smaller loss. The bulls want a pullback because they see this as a surprise, a low probability event. They know they're trapped traders. They expect the market to go higher at least a little bit, so they're hoping for any kind of a pullback to buy. And because both bulls and bears are hoping for any kind of a pullback, if there is a pullback, both bulls and bears will buy it, and we'll get a second leg up. The surprise means low probability. We're getting a bull breakout above a bear flag, and it's a pretty weak-looking rally. So this is a pretty good bear flag. The odds were that the market was going to break to the downside. In any trade where one side has low probability, that side usually also has high risk reward. The bulls had a low probability bet that we get the bull breakout. Because it's a low probability bet, it has good risk reward. And that means either small risk or big reward. Big reward usually means at least a second leg up. Many bulls will not buy here. They'll wait until the market breaks above some kind of a major lower high. Like, for example, the high of that bar. And again, as I said, the bears were selling all of these bars, betting on a resumption of the bear trend. And they even sold early on in this bar, betting that it would be like these, and the bulls would fail, and we'd get a bear breakout. Some bears will even sell this close, betting that the bulls need one more bar, and chances are reversals fail, and the bulls will not get their one more bar. So you'll get some bears not only selling as this bar formed, some will wait for the close and say, I got trapped bulls thinking that they're going to get a successful breakout. Therefore, I'm going to sell this strong bull close, betting that the bulls will not get good follow through. My risk is not big. I sell this close. I risk to just above this bar, and it's a reasonable trade. I'm risking very little. At this point, the probability is that the market is going higher, but some bears will take that short. Bull breakout. The bulls really need one more bar, maybe two more bars. We have a bear channel, and we got a bull breakout above the bear channel. We have a bear flag. We have a bull breakout above the bear flag. And now we have a major lower high. I say that. Let's just assume that we're in a bear trend and we pull back, and it's a major lower high, strong breakout from new low. Now we have a breakout above that major lower high. We have a pair of consecutive good bull bars. Some bulls will buy the close of this bar. Other bulls will buy on a stop above there. Bears will buy on a stop above here. Some bulls will say, well, it's consecutive bull bars, but only one bar is breaking above a major lower high. I need one more bull body. And as small as this bull body is, that is enough for traders to believe the probability is high that we're going to go up higher. So even though it's big tail on top, small bull body, it's a bull body and not a bear body. That is good follow through buying, and it increases the probability that the market will go higher. For some bulls, this is the breakout of a bear channel and a bear flag. For other bulls, this is a more important breakout because it went above a major lower high. Some bulls will see this as the follow through from that breakout. Other bulls will see this as the follow through from this 2-bar breakout above this lower high. Both are high probability buys, and this is what happened. So first leg up and pullback, sideways pullback. We could not even pull back below the low of the prior bar. Traders were so eager to buy, both bulls and bears. Remember, bears are trapped into shorts, and at some point they conclude it's not going down, I gotta buy, and the bears give up. And bulls are trapped out of longs, and they decide at some point that it's not going down, I better start buying with stops, maybe above the highs of these bars, this bar, or as this bar goes up above this bar, just buy. Traders decide that the price is wrong. No one wants to sell here, and it has to go up higher to find where there might be Some bears will even sell this close or important breakout because it went above a major lower high. Some bulls will see this as the follow through. From that breakout, other bulls will see this as the follow through from this 2-bar breakout above this lower high. Both are high probability buys, and this is what happened. So first leg up and pullback, sideways pullback. We could not even pull back below the low of the prior bar. Traders were so eager to buy, both bulls and
Meow meow.
bears. Remember, bears are trapped. shorts, and at some point they conclude it's not going down, I gotta buy, and the bears give up. And bulls are trapped out of longs, and they decide at some point that it's not going down, I better start buying with stops, maybe above the highs of these bars, this bar, or as this bar goes up above this bar, just buy. Traders decide that the price is wrong. No one wants to sell here, and it has to go up higher to find where there might be.
抽卡抽卡。奇拉蒂娜啊，分享应该都很烂。Holy crap! Jesus! 奇拉蒂娜，可能我忘了，我不敢接起你的电话。看一下，普普，来偷个卡，偷个卡。You make me want a different personality， 我在这等候。来，目标这一只，我们的目标是这一只。偷个卡，我们就抽第三张，右边第三张。没有天天过年了。收下。 我看有没有什么好牌。Loop 都没有。都给你，你的爱，他的心，喜欢你。哒哒哒哒哒哒我的心。哒哒，温柔的声音，慢慢的长夜，去匆匆的留下感情。神色太慌张，你眼神逃避，却如此的令人着迷。为何总留恋这种爱的迷离？曾经多少个人牵肠蜡烛不舍夜晚，而现在热情吞成陌路的感叹，何必拿真心与寂寞去纠缠？几人份的长谈到三两句晚安，热多情的遐想，却轻易的走散。情意绵绵总遇见一丝间为难。
I call this a pullback. A pullback is any pause in a bull trend. Technically, this is a pullback.
总是不能
So
抵
this bar fell below that
抗
bar as
你
well. But
心
this is a type of
手
pullback as
的
well. This is an
来
II bull
来
flag. We have a
执
bull trend and always a
迷
bull.
对啊，哪里有 II？ 哦，II，OK。
And we went
执
sideways to here,
迷
put inside bars.
于你
It's a pullback, it's a bull flag.
忽起冷交
Look at the low of this
代
bar. Traders
迂回，这也是 II 吗？它这高点没有比较高吗？骗人的！
saw this, they wanted to buy any pullback. They placed a limit order to buy as low as this bar. Did not get filled. They placed a limit order to buy as low as this bar. Did not get filled. So all of those traders who were so eager to buy a pullback are not getting into the market. Most of them are not getting filled with their limit orders. And at some point they say, it's going up. I'm just going to the market. And you start to get that second leg up. So leg one, pullback. Leg two.
Leg one, pullback.
After any kind of breakout with follow through, the minimum goal is a second leg up.
Let go the second out.
As I said, sometimes you get a third, fourth, or fifth leg up, but the minimum goal is a second leg up.
The first leg up and the second leg up. 一回调二。
We got a bull breakout, and now we're trying to form a channel.
Spike and channel.
A tight channel like this is a breakout.
A tight channel like this, that is a breakout at the bigger time
On a higher
frame.
time frame chart.
A higher time frame.
So this is still a strong
Still
bull
a
trend.
strong
Yes,
bull
we have a second
trend.
leg up, but it's probably continuing
It's probably continuing.
higher because a
Higher.
tight channel like this
Tight channel probably. A tight channel is a breakout at the higher time
is
frame.
usually a breakout on a higher time frame chart. So yes, two legs up, one pullback two. On a higher time frame chart, this is still part of leg one, and we don't know where leg one ends. Whenever you do have a leg one move, you always think about, well, maybe we had a leg one, leg two move. Maybe leg one, pullback, and then leg two, measure move up.
Leg one, pullback, and leg two, measure move up.
Strong enough breakout here. First leg up, second leg up. Second leg up has strong breakout and decent follow through. So there may be a second leg up after this second leg up. In other words, a third leg up. So it's a strong enough breakout. More traders are trapped. Bulls are trapped out. Traders are trapped in. Chances are we're going up at least a little bit more. Another strong breakout, probably strong enough for at least a second leg up. Breakout, pullback, second leg up. Sometimes breakouts are a single bar. Sometimes they're 2, 3, 4, 5, 10 bars. Sometimes you get one breakout and then a second leg up, and that's the end of it. You enter a trading range or even a bear trend. Sometimes you get a series of breakouts, breakout, pullback, breakout, pullback. breakout, 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 breakout.
Breakout.
Now, sometimes you get a very strong
Second.
Like, here we have an okay bear breakout. Any trend bar is a breakout. Any series of trend bars is a breakout. Bars closing near their lows, having decent-sized bodies, increase the probability that the first pullback will be sold when you get a second leg down. And sometimes the second leg down is very strong, especially if it's in a trading range, and it becomes a second leg trap. So if this were a trading range or a broad bull channel, and I see a strong second leg down like that, I'm assuming it's the second leg trap, and it's the end of the move, and not a measuring gap. So more likely an exhaustion gap, and the gap between this close and that low will close, and the market will either go sideways or even up. Strong bear breakout. Is it strong enough so that the odds are there'll be at least a second leg? Yes. Now, second leg does not necessarily mean second leg to a new low. Sometimes you get a breakout and the second leg does not fall below the low of the first leg. This might be the second leg, this might be the second leg, this might be the second leg. Sometimes the second leg down can form a high.
You make me want a different personality. 我在这大脑，你却躺在玩游戏。请问导演还是个白人？从日起。我不敢接起你的电话，可能我忘了。
Higher low. Second leg down, it can be simply a single bar. Here we got a bull breakout of a bear flow. Alright, so we got either one leg up, pull back, two legs up, and we got a bull breakout above a double top. You can say one leg up, two legs up. So it could be a large bear flag. But in any case, we got a double top bear flag here, and we have a decent bull breakout. So look at the follow through, the terrible follow through bar. So you get disappointed bulls who bought that close, and now they're hoping for the market to get back to that close so they can sell out of their longs, and that's what they did here and here. A lot of bulls who bought this close or bought the breakout decided this is disappointing. I better get out break even. I'm going to place a limit order to sell on that close, and when I got back to the close, they sold.
You make me wanna different personality.
可能我忘了，而不开始决定的联络了。
Strong enough bull breakout. The market is probably not going to go straight down. Strong enough bull breakout so that there will be some buyers on a reversal attempt. And we'll get a second leg up. Again, sometimes the second leg up does not get above the top of the first leg up. And sometimes the second leg up is simply a single bar. Wedge bear flag, try to get a bear breakout. And it reversed up and we got a bull breakout. Double top instead of a downside breakout. We got a bull breakout. Second leg up, a problem. It's basically an II or an III pattern, micro double top, and this is a possible micro double top and a failed breakout. Higher probability to sell below this bar, betting on a failed bull breakout. The bulls trying to get up here, they had a second bar up here, and then this bar tells me that a lot of the bulls who bought here used this bar to get out break even, and the bulls are giving up. So we got a micro double top and a failed breakout above the wedge bear flag. Bulls will give up, and here the bulls do give up, and bears will short either below this bar, below these three bars, or below this bar. This is where traders mostly sold. Second leg, a lot of times, it's not clear, and a lot of times you need to wait and you need more bars to get clarity. Different computers will use different counts. So strong bull breakout, pretty bad follow through, but still strong enough bull breakout for a second leg up. Is this the second leg up? Some computers will say this is it. We went sideways. We're trying to go up again. Is this the second leg up? Again, some computers will say that's the second leg up, and we fail. Others will say this is the second leg up. Others will wait and say we'll probably get an even stronger second leg up. And here we did get an obvious second leg up. So at this point, maybe this is the second leg up. At this point, maybe it's the second leg up to a micro double top. Bears are trying to break to the downside. Bear breakout, bad follow through from these two bars. We got a clear second leg up. At this point, we have a big bull breakout bar, clearly a second leg up. Comparable in strength to this, maybe leg one, pull back leg two, and then terrible follow through. The minimum requirement has been met. Strong enough to get a second leg up, we got a second leg up. Strong enough to get a measure move up, we got leg one, pull back leg two. So the bulls are satisfied, they got their goal. And then we got this bad follow through bar. A lot of traders will sell that, betting that we have the second leg up. Some traders will say, well, isn't this strong enough for another second leg up? It might be, but I certainly would not buy at below this bar. The only thing I would do at below this bar is either get out of longs or go short. Bear breakout, we have a bear breakout here, probably second leg down. This might be the second leg down. This is the euro versus the dollar, 60-minute chart. Maybe this breakout is strong enough so that we have a bear break bar. The only thing I would do at below this bar is
second leg.
either get out of longs or go short. Bear breakout, we have a bear break hour. The only thing I would do at below this bar is either get out of longs or go short. bear breakout. We have a bear breakout here, probably second leg down. This might be the second leg down. This is the euro versus the dollar, 60-minute chart. Maybe this breakout is strong enough so that we get even further down. Maybe because this channel is so tight. I don't know if it's a micro channel. 60-minute chart. Maybe this breakout is strong enough so that we get even further down. Maybe because this channel is so tight. I don't know if it's a micro channel. This might be a little pullback, but in any case, it's a pretty tight bear channel. It's a breakout on a higher time frame chart. So any pullback that we get probably will be followed by a second leg down. So strong bear breakout, 60% chance of a second leg down, 40% chance it'll fail and we will reverse up. Big bear bar, consecutive bear bars, the bulls are giving up. So all the bulls who are buying in here hoping for a reversal, maybe higher low major trend reversal, they gave up here. This is a minor reversal. Again, the first breakout above a tight bear channel, probably the best the bulls get is a bull leg that becomes a bear flag. Here, not enough bars for a major reversal, so again, minor reversal, which means odds are we're going lower. And here, both bulls and bears sold. The bulls sold out of their longs, giving up, and the bears sold, betting on resumption of the trend down. Same true here. Very strong bear breakout, possibly an exhaustive end of the move. Whenever you have a strong bear breakout occurring 20 or more bars into a trend, it's more likely to be an exhaustion gap, and that's what we have here. The biggest pair of bear bars in the entire sell-off, occurring maybe 50 bars into the trend, more likely exhaustion gap. Gap between this close and this low, this close and that low, this close and that low. Chances are we're going to go to the top of the sell climax, or at least a little bit above it, and you get two legs up, one, pull back, two. But sell climax does not mean reversal into bull trend. It just means the bears are exhausted, and they'll wait 5 or 10 or more bars before they're willing to sell again. They usually wait until the market tests the top of the sell climax. They try to break above it here, 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 kept failing, and then at some point here, everyone sold. The bulls gave up and the bears sold. They tried to break above it here, kept failing, and then at some point four. But sell time X does not mean reversal into bull trend. It just means the bear. Are exhausted, and they'll wait 5 or 10 or more bars before they're willing to sell again. They usually wait test the top of the sell time max. They tried to break above it here, kept failing, and then at some point here, everyone sold. The bulls gave up, and the bears sold. Another big sell time max consecutive.
阿罗哈，替我跳跃。
热的还是冰的？冰的，
冰的
哎呦，
这是咖啡哦，咖比尔，
卡比尔，哎，
怎么了？
我上面那个唱歌的又不会，又调不出来，走，
我去帮你用。
你是有空吗？
可以啊。
好了。
잠깐만 주세요. 等我一下哈。 就这样做吧，我看着你去海水，别做的做嘛还累，我的另一半在哪里？我 I don't care。我白天我白天可不等后两头回应，感谢出来熊改一记得。
Self maxes here, 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 bigger,
Bigger.
here, even bigger still.
Bigger
So probably we'll get some kind of significant bounce.
Significant
So-
bounce.
Each one of these bear breakouts, bulls are giving up. The bulls who are hoping for a bottom, they're giving up. Bulls try to bottom here, minor, try to bottom here, minor, try to bottom here. Maybe a higher low, major trend reversal, major trend reversal. Probably not enough buying pressure. So even this is probably a minor, higher low. And every one of the reversal attempts failed. A lot of times when you're in a channel and the market becomes always in long, like it probably was somewhere in here, it's probably a broad bear channel. Broad bear channels typically have times within the channel that the market is always in long, but the market continues to make lower highs and lower lows. So here, this is a test of the top of this final bear leg, and it became a double top bear flag. Here's the neckline, broke below the neckline. Pretty impressive sell climax, probably an exhaustive sell climax, and we got to the top of the sell climax. And then here we have another even stronger sell climax, an even bigger bear bar than any of the bars in the past 100 bars. So the odds are it's going to be a sell climax, an exhaustion gap rather than a measuring gap. So it's possible that we get a measuring down from there. More likely the gap will close. By close, typically you get to the top of the sell climax bar, you get to the top of the sell climax leg, and then you enter a trading range. Sometimes you get a bull trend. Bull channel, bear flag. Bull channel or trading range, bear flag. Stronger bull channel, but still bear flag. Little triangle, bear flag. Got a bull breakout and then a bear breakout. Every attempt to rally, the bears see all of these attempts as bear flags. And so they're looking to sell a bear breakout below the bear flag. So they can sell with stops on the reversal back down. Some bears will sell above bull bars, betting that the reversal up is minor. But bears are selling all the way up. And that's why the rallies look so weak. Where are the consecutive big bull trend bars? They do not exist because the bulls are not strong enough. And all of these reversals are minor. Minor means at best a bull leg in a trading range. And the odds are that we'll have at least one more leg down.
学完这一课，我要去吃东西，肚子好饿。Holy shit!
So I want to talk about breakouts and trading ranges and breakout attempts and trading ranges and successful breakouts and trading ranges. Clearly, a trading range. Everyone knows, I always talk about my 80% rule. 80% of the time, when the market's in a trading range, strong breakouts fail, or all breakouts fail, no matter how strong. So good. Bull breakout, reverse down, good bull breakout, reverse down. Bears trying to break out, and they're failing. And after a trading range goes on for 20 or more bars, the probability of a bull breakout becomes the same as for a bear breakout. Before the trading range, we were in a bear trend, and early on, it was more likely we would get the downside breakout. But after 20 or more bars, the probability becomes about the same. Traders know that all through here. Once you decide after 20 or so bars, it's a trading range. Traders will bet against breakouts. They'll sell bull closes near the top. They'll buy bear closes near the bottom. They'll buy reversals up near the bottom. They'll sell reversals down near the top. And they scalp. They take quick profits because they know the odds are breakouts will not be successful.
Success.
So they're scalping. Bulls and bears are buying low. Bears are buying low to buy back their shorts. Both are selling high. Bulls are selling high to sell out of their longs. But both know that because of the market cycle, the market's either in a trend or a trading range, and if it's in a trend, eventually it becomes a trading range. If it's in a trading range, eventually it becomes a trend. Trading range traders keep buying low, selling high, and scalping, knowing that eventually there'll be a successful breakout and they might lose. But if they take enough trades in here, profitable trades in here, they're hoping to make enough money so that it more than offsets the final losing trade. Bulls buy in the bottom third, scale in lower, scalp off.
那边有没有垃圾？
一点点，
一点点。
一点点的不少。就是这个是。
那个等一下我叫。
ありがとうございます。
我要怎么样回答？
どういたしました。
no，
你就说。You're welcome.
You're welcome.
You're welcome. Thank you. ありがとう。イエイイエイ。哦，出心妹。出心妹是小心的意思。你要说阿拉索。
要说什么？
阿拉索。阿拉索，我知道了。你说阿拉阿拉。
阿拉。
阿拉，对阿拉。
阿拉。
对。知道。安了。最爱的故事，我开始忘了，是不是我又走错了？怎么？你哭着对我说。童话里都是骗人的，我不可能是你的王子。从你说带我以后，我的天空星星都亮了。我认真，童话里爱的那个天使， 张开双手，变成翅膀守护你。你要相信，相信我们会像童话故事里，幸福后快是结局。你爱的那个天使，张开双手，变成翅膀守护你。你要相信，相信我们会像童话故事里，幸福后快乐是结局。
And bears sell on the top third scale and higher.
它能否指引我向前？它能否指引我向前？漂亮多了。重点就是什么？重点就是怎么啦？
That the bull breakouts will fail. And eventually there is a successful breakout. But at this point, it's 50-50 bet. It'll be up or down. This is a pretty big bear bar. You can say, well, Al, it's a big bear bar and it's 60 or 70 bars into a trend. Isn't that an exhaustion bar instead of a measuring gap? Well, it's not really in a trend. The market was sideways for 30, 40, 50 bars. So this is probably the start of a bear trend. The bigger the bar is, the more likely bears will get follow through
The biggest the bar is.
selling. The more it closes on its low instead of having a big tail on the bottom, the more likely it'll lead to a leg down. And the more this close is below the trading range, the more likely we'll go down. And the more bars that this bar closes below, the more likely we're going to go down. So this has everything going for it. a big bar, closing on its low, closing below the trading range, closing far below the trading range, closing below the lows of the past 50 or 60 bars. So probably going to be some kind of a measuring gap. Bulls were buying low. They're also buying below bars. Below this bar, the bulls will buy. Below this bar, bulls will buy. Below this bar, bulls will buy. As soon as this bar closes, they place a limit order to buy that low, and they get this. If you're a bull and you've got long right here as the market fell below that low, what do? At this point, you know it's probably a measuring gap and that we're going lower. So you got to sell out of your longs. You can either do it immediately or you can wait for any kind of a pullback. But if you wait for a pullback and you're selling, you know the bears are going to sell as well. There are some bears who did not sell this breakout. It's a surprise. They're waiting for a pullback to sell. So both bulls and bears are waiting for a pullback to sell. What does that mean? It means that whenever this leg ends and we get a pullback, probably bulls and bears will sell the pullback and we'll get at least one more leg down. Okay, a pause. The bears, after their breakout, got their minimum, the absence of a bull bar. The bulls have a bull bar here, but chances are this is enough follow through this bar and that bar so that there are more sellers above this bull bar than there are buyers. Both bulls and bears will use this little reversal attempt to sell. Bears will sell into new shorts, the bears who do not yet sell, and bulls will sell to get out of their losing longs. To sell. Bears will sell into new shorts, the bears who do not yet sell, and bulls will sell to get out of their losing longs. It does not matter if you sold here or here. Your stop is still up here at the top of the bear leg. Maybe you can put it above the top of this sell climax or above the top of this. This is the start of where the market clearly became bearish. But in any case, you got to put a stop fairly far up. And what does that tell you? Risk reward probability. All right, so your stop is far, so your risk is greater. Also, you're fairly far into the trend, so there's less reward. So selling anywhere in here has bad risk reward. When you have bad risk reward, you know you have good probability. So the probability is for falling more. Let's say you sold anywhere in here, and you say, gosh, my stop is way up there. I don't want to risk that much. And a lot of the computers that did short through here decide that the risk is too great, and when the risk is great, they have to reduce their risk. The easiest way is to take profits. And when the computers or traders take profits on profitable shorts, they get a little reversal attempt. This is not so much due to aggressive bulls buying. As it is to bears looking at their stop being so far away that their risk is now big. It does not matter where you sold. If you sold here, if you sold here, if you sold short, that's your risk. So your entry price has nothing to do with it. All that matters is where your stop is. Wherever you entered, irrelevant. If you're still short down here, that's your risk. That's how much money you're risking. And a lot of bears will buy back some of their shorts, and it creates that little pullback. A lot of times, when there's a little pullback like that, the bears will wait a few bars to make sure the bulls do not get a micro bottom and a big reversal. So a lot of times you go sideways for several bars after the profit taking, but the probability still is that the market will go lower. Let's say a bull does not buy back his long here. Maybe he's thinking, we should get higher up, we should overlap that low, maybe get up to the top of the sell climax. Some bulls want a higher pullback to exit with a smaller loss. So a lot of bulls will wait to sell out of their losing longs. And sometimes the bears will wait as well, thinking, maybe this does not look like particularly good follow through tight trading range. Maybe we will go up a little bit. Well, I'm going to wait a few bars before I sell because I'd like to sell higher, and I'll give it a few bars to see if it'll go higher. And if it does not, and instead it starts to go down, I'll sell the breakout, the downside breakout. Bears are giving a chance to the bulls. Okay, bulls, how strong can you be? Are you going to be able to turn the market up a little bit? And if you do, then I get to sell at a higher price. So you have bears wanting to sell and waiting to sell, waiting to see if they can get to sell higher. They're going to sell either way. But a lot of times, after a little bit of profit taking like this, the bears wait to see if the bulls can lift the market higher, and then they sell. Bears see the bulls having a micro double bottom, but tight trading range. And is this the second leg down? Is it leg one, pull back leg two? Or are traders still betting that this is going to be a measuring gap and it will fall for a measuring move down? I think the probability still favors the bears. Bulls see a micro double bottom, hoping that we'll get a higher bounce. But a lot of the bulls will use any minor reversal like this to sell out of their lows. And they'll give up, and we might get another breakout bar to the downside. The bears sell, knowing that the bulls will use any kind of a bounce to sell. Bears know that the bulls probably will wait many more bars before they buy again. If the market starts to go down after this attempt at a bottom, the bears know the bulls will probably wait 3, 4, 5, 6 bars before they buy again. So we can get vacuumed down pretty quickly, creating a very strong second leg down. And because of that, bears will sell, knowing that there are not enough bulls at this price. The market has to go lower to find a price where bulls will be willing to buy. So bears sell, and you get a breakout bar, a bear breakout. The bulls who bought in here are giving up. The bears who wanted to sell higher decided that it's not going higher, so they sold here. Trading range, this range might be too tight to trade, but if a person were trading it, they want to buy in the bottom third and sell in the top third. Bulls and bears. Bulls buy in the bottom third, hoping for a scalp up, and then they sell in the top third, take profits. Bears sell in the top third, hoping for a scalp down. When it gets to the bottom third, they buy to take profits. And both are willing to scale in. Everyone knows eventually there's going to be a successful breakout. After 20 or 30 bars in a trading range, the probability of a bull breakout is the same as the probability of a bear breakout. And they hope to make enough money scalping, especially with limit orders and scaling in during the trading range, so that when the breakout finally comes and they finally lose, they'll have enough winnings to more than offset that loss. Again, when a range is this tight, I think most traders should not trade. This is the dollar versus the yen. Bulls buying near the bottom, confident the bear breakout will fail. Bears selling near the top, confident the bull breakout will fail. And both are correct. 80% of all breakouts.
如果说啊，我这样子，然后用盘整打法，然后咱就说啥呢？把背景勾起来，吵死啦！把0.5拿走，把这两个把水平线全部用粗一点。第三个50%，随便。这样我就可以形成它和价格这的时候， 那个真买了，纸粉就放这里，没。我不敢一点啊。100天。你却挡在我面前。我自己是觉得啦，你要去找一下。我自己是觉得啦，我觉得你要去找一下，你为什么会？我觉得你可以自己找一下你爆仓的理由，到底是因为策略的不完整，还是因为你自己心态的不好，然后去找到这些原因，然后下一次的时候做改正。因为讲真的，其实没有人，因为讲真的，其实真的不可能没有，因为讲真的，其实真的没有人一辈子不爆仓的。You make me wanna different person 那个题，我在这奋斗，你却在这玩 USDT。教员还是个坏人的回忆，确定 personality.
Breakouts fail, so traders are willing to buy low, sell high, and scalp. Other traders, most traders from the ranges this tight, most traders should wait for the breakout and see what it looks like.
我在这边努力，却在这玩游戏。请导演 ，one forward two forward， 1回调2回调3，搁这呢。可笑了，蓝天是你在我背上时牵起我的双手，让我不再一个人孤独。是你给我勇气面对所有难题，就算绝望也不会靠近。1、2、1、2、3。一年四季，风风雨雨，是你给我勇气。然后去到一个从这边到这边的每选 move 的位置，每选 move 的位，去到这边到这边的每选 move 的位置，想哭的还是它变朦胧，哦，还是它变朦胧，去到每个 move 的位置，想哭的还是你是它变朦胧，你是它变朦胧。
Early in the breakout, bears will sell the bull close at the top of the range, but it will fail. But now we have a bull breakout, closing on a top high, closing above the top of the range, closing above the top of the past 50, 60, 70 bars. And then we have a follow-through bull bar. Tail on the top, yes. weakens the case for the bulls, but a close above the middle of the bar and a second close above the trading range. Probability is measuring gap, not exhaustion.
突破后怎么样子？这边突破 TR 后好的跟随，这里突破丢开的缺口大概率是测量型，而不是捷径型。测量型缺口，而不是捷径性缺口，这边突破后，如果我有好的跟随，那这里突破后，如果好的跟随，这里开的缺口大概率是测量型缺口，而不是捷径缺口。
So probably going up for at least a measured move based on the height of this range, so somewhere up here, and strong enough breakout so that if we try to reverse down, bulls and bears will buy. Bulls will buy, hoping to be buying low, expecting a second leg up. Bears will buy because they see a strong breakout with follow through, knowing a second leg up is likely, so they'll buy back their shorts. A lot of bears wait for that follow through bar here or here, and then conclude that this is just too strong. I'm going to buy it at the market. And chances are we're going to get some kind of follow through move up. This looks like buy the close, maybe starting here. Traders, every bull close, they just keep buying, betting that we're going higher for some kind of a measure move up. Every bar that gets added to it increases the profit target, because one of the profit targets is simply based upon the breakout. From the open of the first bar of the breakout to the close of the final bar of the breakout, usually you get some kind of a measure move up. Now suppose you bought below this bear bar, or above this bull bar, or even this close of this bar. Let's say you bought here. Where's your stop? For all of the traders, it's the same, below the bottom of the bull leg. Your stop has nothing to do with where you entered. It has only to do with the price action. And if you're buying on the bet that it's a swing up, it does not matter where you bought. All that matters is where the stop goes, below the bottom of the most recent higher low. So down here. At some point, traders start to get uncomfortable. They say, "Wow, gosh, my stop is way down there. I don't want to risk that much." And the computers have protective algorithms within them. So whenever the stop gets too far, they conclude the risk is too big. They have to control the risk. The easiest way to control risk is take profits, and that's why you get a pullback. Even though it's a very strong bull trend, you still get a pullback, because at some point, too many traders, too many computers decide they have to take some profits to reduce their position size. So that profit taking creates the pullback, but it's still a bull flag. The bears who sold for any reason are hoping for a deeper pullback if they did not give up here. Most did give up here, but if they did not, they're hoping for a deeper pullback that would allow them to exit with a smaller loss. Some bears selling up here, and they need a deeper pullback to make a profit. So bears are looking to buy. And when you get a pullback like this, a lot of times the bulls will wait 5 or 10 bars to see how low the bears can drive the market. The bulls want to buy. They'd like to buy down here, but they'll buy for any reason. And if the bears are not successful in lowering the price after about 5 or 10 bars, the bulls will just buy at the market, or they'll buy above bars with a stop, betting on a second leg up. And if the bears are not successful, all the bears who shorted in here, and the bears who shorted down here, and who did not get out here, will give up, and that will create a second leg up. If this grows to 20 or 30 bars, then we're back in another trading range. After about 10 bars or so, bears start to buy, getting nervous that it's not going down, and they got to take their loss. And bulls begin to buy as well. Same reason, it's not going down. Odds are we're going up for some kind of a measured move. And after 5 or 10 bars, if it's not going down, I want to buy, so I'll start buying with stops or at the market. And then we got a little bit more buy the close after 3, 4, 5 bull bars. Reversal attempts probably fail. Pretty tight bull channel, not much in terms of big bear bars. So more likely these reversal attempts will fail and will continue higher. The bulls know the bears are trapped. So when it starts to go up, even though the bars are small, once you start to get 3 or 4 bull bars, the bulls know the bears will give up. So the bulls are buying, and the bears eventually do give up. Maybe that bull trend bar there. And this
这么好，怎么这么好啊？夏工，
啊，拿一个盘子来好了，我顺便拿下去。
好啊。怎么这么好啊？你有吃了没？
吃了。
这边。我还在想我午餐要吃什么呢？还有加鸡腿耶。阿公，我把它洗洗好了。
不用洗，我拿下去洗。
真吗？
谢谢阿公。那个的吗？Thank you。Thank you。怎么样了？
不客气。
You're welcome.
You welcome。
You welcome.
come 是哪一个 come？ 就 come 那个 come 吗？不是吧
You're welcome. 不是
？Well 是 W-I-L-L 啊。
对。You are welcome. 不是 welcome. W-E-L-C-O-M-E. Welcome 是一个词。
W-E-L
C-O-M-E.
Welcome。
它不是 welcome， 它是 welcome。
Welcome 那 come 呢？后面呢 ？Well W-E-L 还有呢
C-O-M， 我写给你看。
C-O-M。
C-O-M。哦，你们还没关啊？
没有看到。
You're welcome. W-L-C-O-M. Welcome.
Welcome。这个 come 就是过来。
但是它 welcome 是一个词。
好。不客气。Welcome。
You're welcome.
Welcome。有猫你放哪里去？
看到我衣柜。
好了。
谢谢阿公。
好，不见。
他应该在衣柜。哎，不可以啊。
Video, I talked about the importance of a strong breakout because if it's strong enough, the odds are the first pull.
强突破。
Pullback will be followed by a second leg. And then next I talked about successful trading range breakouts. I'm Al Brooks, and thank you for watching.
Thank you, Al Brooks. Yahoo! Never wanna be there. 你始终依然。
我在这等候你，却躺在玩游戏。
吃饭，吃饭，吃饭。休息一下。
喵喵喵喵，嘟嘟喵喵喵喵喵。
This is Al Brooks. Thank you for watching the Brooks Trading Course. This is the 4th of 8 videos on breakouts. In this video, I'm going to talk about second leg traps. The market makes a leg, has a pullback, and then has a second leg. The second leg is especially strong, leading you to think that it's going to lead to a breakout, yet it reverses. I'm going to also talk about strong breakouts. I will discuss whether or not breakouts are likely to succeed or reverse. Even when something seems very clear, you always have to be ready for a surprise. Nothing in the market is 100%, and most things are only between 40 and 60% certain. So that means even when you think something is probably going to happen, there's at least a 40% chance the opposite will happen, or what you think will happen will not happen. For example, here we have a pretty good bull trend, and a pullback that's not very strong. It lacks consecutive big trend bars closing on their lows. Also, it pulled back about 50% of the bull trend. So the odds are it's a bull flag, and it will be followed by a second leg up and a test of the high, or certainly of the high close. Both bulls and bears expect a rally. The bulls got a breakout, a decent looking bull trend bar closing on its high, and closing above the high of the past 5 or 6 bars, so that is a sign of strength. And at this moment, there is a 60% chance that we're going to go at least a little bit higher. Yet, you always have to be prepared for a surprise. Here, we have a huge bear trend bar, closing on its low, closing below the low of the prior bar, closing below the higher low, closing below the low of the past 20 bars. So that is a big surprise. Huge bear breakout, but you need follow through. And instead, look what the bulls did. They created a bull trend bar after a huge bear trend bar. And that generates confusion. Why were the bears unable to get a second consecutive bear trend bar? And why were they unable to close this bar below the low of the bull leg? So something's wrong with this bear breakout. We have a bear breakout and a pullback. So this is a low one sell signal bar. It did not get triggered. We have another pullback bar. And the follow through from this bear breakout came 2 bars later, not on the next bar. It's always better if you get immediate follow through, and the second bar is a big bear bar closing on its low. It's usually a lower probability bet that the breakout will be successful if the bar after the big bear breakout is a bull bar. But sometimes you get the follow through bar 2 or even 3 bars later. Here we have a bear bar closing on its low, and it's a low one sell signal bar. The high of the bar stayed below the low of this higher low, so we have a gap. That also increases the chances that we're going at least a little bit lower. Now think about what just happened here. We have a huge bear bar closing on its low, surprising everyone. Whenever there's a surprise, bulls and bears both get trapped. Bears get trapped out. They thought the market was going up, and a lot of bears did not sell here. They're hoping for any kind of a pullback that will let them sell at a higher price. Bulls also assumed the market was going up, and as this bar started to form, they assumed it would form a double bottom here. Yet when it closed way down here. And the bulls at this point, who did not get out during here, are thinking, oh my gosh, I'm in a losing position, I gotta get out. And they're hoping for any kind of a pullback to get out with a smaller loss. So a lot of these bulls who bought anywhere in here, bought this breakout of a bull flag and did not exit here, now have limit orders trying to get out, maybe at a 50% pullback from this bear breakout. Maybe they'll sell above this bull bar, maybe they'll sell below this bear bar, but these bulls are trapped into a losing trade. So bulls trapped in, bears trapped out. The market's probably going to go down for at least a small second leg, maybe for a big bear trend. Here, we did get a second leg down. Both bulls and bears sold below this pullback bar, so it's a low one short, first pullback. The bulls tried to reverse up again a second time from a micro double bottom, but are these 2 bull bars enough to reverse that bear bar? Probably not. So a lot of traders would not buy above this bull bar. And the bulls who did saw the entry bar is a small bear doji. They are unhappy, and those bulls are going to get out. And the bears are happy that this is not a big bull bar, that it's a bear bar. So they're more confident that we're going lower. Some bears sold below 1, and other bears sold below 2. The low 2 bears have a good entry bar, good follow through, probably going at least a little bit lower. I want to talk a little bit about second leg trap bears have a good entry bar, good follow.
我像颗流星，离不开你的眼睛。I love you， 我是一只鱼，而你成为了氧气，像乐观的星星，照亮宇宙，只为了看见你。
Probably going it.
好，来这边讲了哦。一开始牛旗，大家市场上涨的几率是60%的出现大跌破。出乎所有人的预料，这时候多头被套住了，空头没办法进场。所以任何时候回调发生，多头和空头多头需要解套，空头需要进场回调，空头和多头都 率大几率。会有二段下跌。
At least a little bit more. I want to talk a little bit about second leg traps. Here, we're in a trending range. We're down, we're up, we're down, we're up. And even though the market's rallying here, big bull bar, doji, big bull bar, doji. It's selling off here, got a couple bear bars, and then bad follow through. Tails below bars, tails above bars. This is trading range price action. So even though we're selling off, it's probably a bear leg in a trading range. Even though
下跌有长影线，长影线上涨，下跌，下方有长线上涨，上方有长影线，是正大区间。
we're rallying, it's probably a bull leg in the trading range. And then you get this. What just happened here? We have a huge bull breakout at the start of a second leg up. Yet, it's not above the top of the trading range. You look to the left. We're a little bit above here, but what kind of follow through did we get? We have terrible follow through after the bull breakout above the top of the range. In trading ranges, there's often a very strong second leg. First leg up, pullback, second leg. But unless there's both a strong breakout and strong follow through above the top of the range, it's more likely a second leg trap. So first leg, pullback, second leg, trapping traders into believing the breakout will be successful. Yet it traps bulls into buying high. Here we have a sell-off, not particularly strong, lacking consecutive big bear trend bars, bad follow through after bear bars, big bear bar, tail on the bottom. It looks like a leg in a trading range. And then we're accelerating downward, and here we have a pair of strong bear bars closing on their lows, not big tails. So this looks like the market is changing from trading range price action into breakout trend price action. However, whenever you have a breakout of a trading range, you always have to be suspicious that it could be a second leg trap, and that's what took place here. So for first leg down, pull back, and now we're trying to accelerate into a trend. Yet it was a trap. It trapped traders into selling low. We have a micro double bottom, a good looking bull bar, and then we begin a leg up in the trading range. Here, strong leg up, second leg, first leg up, a leg in a trading range, a bull. Flag, the bull flag, the bulls are hoping it's a bull flag, and this is the start of a bull trend. And then we have this very strong second leg up. And bulls are hopeful. They're hopeful that the breakout will succeed. And traders who do not understand what's going on, they'll buy. And then they'll hold long even after this big bear bar. Smart traders will say, second leg trap, trading range, I'm going to start selling below this strong bear bar. Trading ranges, they constantly trap traders into buying high and selling low. You constantly get strong breakouts near the bottom that fail, trap traders into selling low, strong breakouts near the top that fail, and trap traders into buying high, and they reverse down. Usually, when they reverse down, you get a good sell signal bar. When you have a second leg trap at the bottom and they reverse up, you get a pretty good looking buy signal bar, and very often a micro double bottom. It's very important always to look to the left. Bear breakout, look to the left. Wait a minute, there's a lot of trading range price action here. This might be a trap. Very strong bull breakout, look to the left. We only have 1 or 2 bars above this close, and then we got this reversal. This might be a second leg trap. We have a trading range, and most trading range breakouts fail. Whenever you get a breakout, a second leg that looks strong enough so that a third leg down is likely, yet you're in a trading range, you have to be ready for the possibility that the breakout will fail and the trading range will continue. No matter how strong the breakout is, whenever there's a trading range breakout and you get a breakout that looks like it's strong enough to be the start of a bull trend, at least get a second leg up, you have to be prepared that it's a trap, forcing traders into buying high and then immediately reversing. If you see the breakout not having good follow through buying and instead you get a bear bar closing on its low, this is probably a trap and we're probably going to get a couple legs down, one pullback, 2. I'm going to talk a little bit now about signs of strong breakouts, things that make traders believe that a breakout will be successful. All right, be ready. These are signs that a bull breakout will be strong. My list is not complete, but the point I'm making is that there are lots of indications that a breakout will be successful. And the more of these things that are present in a breakout, the more likely the breakout will succeed. You can stop the slide here and you can read them. I'm not going to spend a lot of time on the slide.
The breakout bars has a large bull trend body and small tails or no tails. The larger bar, the more likely the breakout will succeed. If the volume is 10 to 20 times that average volume of recent bar, 10倍或20倍，比这些的话 the chance of the follow-through, buying, and a possible measure move increases. The breakout goes very far. Lasts several bars and breaks several resistance levels like moving average, parallel swing high, or the trend line, and each by magnetics. As the first bar of the breakout is forming, it spends most of its time near the high and pullback are small. Near the high and pullback is small. That's in the quarter of the high of the ground bar. And there's a sense of urgency. You feel like you have to buy, but you wait, pull back. Yeah, it never comes. The next 2 or 3 bars also have bull body that have at least average size of the recent bull and bear body. Most bars have closes above their midpoint. Midpoint, even if the body have reality small, tails are prominent. If the follow-through bar is large, the odds of the trend counter are greater. The spike grows to 5 to 10 bars without pulling back from then a bar or so. The spike grows to 5 to 10 without pulling back or more than the bar or so. As a bull breakout goes above the previous significant swing high, the move above the high goes far enough for the scalper to make profit. If he enter on the stop at one tick above the swing high, as the bull breakout goes above the previous significant swing high, 如果这个看涨的突破了重要的高点，重要的摆荡高点 the move above the high goes far enough. 如果这一个向上走，它是能够让 scalper to make profit， 是能够让那些波头比交易者去赚钱的。He encountered on the stop at one tick above the swing high， 就是如果他在那上面做一个限价单买入是会赚钱的，它就有可能是一个 bull breakout. One or more bars in the spike has a low that is just a tick below the close of the peer bar. One of more bar spike has low that is at or just tick below the close of the peer bar. 就是你要在那个前一根的那个 bar 的上面。One or more bars in the spike has opened that is above the close of the peer. One spot in the spike has opened that above the close of the 你的开盘价要在你的就是有没有跳空，有没有跳空高开。One or more bar the spike has the close on the high or just one tick below. One or more bars in the spike has close on its high or just one tick below its high. 就一样是这个。The low of the bar after the bull trend that is above the high of the bar before the bull trend bar. 就要有缺口 creating the micro gap 就要有缺口 which is a sign of the strength. This gap sometimes become measuring gap, although it is not significant. Although it is not significant to trading, they probably represent the space between a small time frame. 这什么 a little 不知道 wave 1 high and wave 4 pullback, which can touch but not overlap， 就是它的最低的地方要比最高的地方高。The low of the bar after the bull trend bar， 就是他们之间有开缺口啦。The overall content makes the breakout likely, like the resumption of the trend after the pullback, or the higher low or the lower low test of the bear low after strong breakout above the trend， 就是你突破的前面你的背景要是好的，像是回调之后的那个趋势回复，或者是有创出一个 higher low 或者是 lower low， 或是你去测试 higher low 或 lower low 这些比较重要的一个你突破的那个点。The market has had several strong bull trend days recently. The market has had 就是有 strong bull trend days recently， 最近已经有很强势的上涨日。There was growing buying pressure， 你的那个买压越来越大。In the trading range， 当在 trading range， 当在盘整极限的时候，你的买压越来越大。Represented by many large bull trend bar， 就是代表着会有很多趋势 K 线，看涨趋势 K 线。And the bull trend bars were clearly more prominent than the bear， 然后那些看涨趋势 K 线会待的比那些看跌的趋势 K 线还久，还就是很清楚的那些比较多啦。The first pullback occurred only after 3 or more， 就是第一次回调突破之后，第一次回调差不多。The first pullback occurs only after 3， 在突破后的三根或几根 K 线就会有一次回调。The first pullback that's only one， 就是 and its follow bar is not strong bear reversal bar， 就是它第一次回调的时候不能就是差不多只有1到2根 K 棒。那 it is follow bars， 然后它的下跌的跟随不可以是反转 K 线，就它不可以形成反转 K 线。The first pullback does not reach the breakout point. The first pullback 第一次的回调 does not reach the breakout point， 它没有去回测原本的突破点。Does not hit the break-even stop， 就是这样是代表趋势强势嘛。The breakout reverse many reason close and high. For example, when there is a bear channel and a large bull bar form, there is a bear channel and a large bull bar form. This breakout but has a high and close at above the high, and closes of 5 or even 20 or more。 就是它的假设一个下跌的一个趋势中，它突破了可能5到20根或是更多根的一些 K 棒，然后它收在高位。A large numbers of the bar reversed by the close of the bull bar is stronger signs that the similar numbers of the bar reversed by the high. Okay, a large numbers of the bar reversed by the close of the bull bar is stronger signs. A large numbers of the bar reversed by the close of the bull bar is a stronger signs than the similar numbers of the bar reverse is high. 就是它下跌的假说在下跌趋势嘛，那下跌趋势这些 K 棒跟我上涨趋势 K 棒其实是如果是差不多的话，然后那些 K 棒刚好开在高点的话，那代表说这次 breakout 是很有可能是个过靠，这也太多了吧 ？Shit man。
Because if I did, I would have to spend a lot of time on this slide.
好，那我们看一下 week。 The breakout bar has a small. The breakout bar has a small or average size. The breakout bar has a small or average size board trend bodies and the long tail on top. 就是这个 breakout， 如果它是体积比较小，或者是它跟其他的人比，它体积比较小，或者是说它有很多的长影线在上面的话，它就是一个弱趋势。The next bar has bear body, the bear. The next bar has a bear， 就是没有好的跟随 ，either the bottom reversal bar or the bear inside bar， 就是这些不好的跟随。That bar closes on the near, and that bar closes on or near its low, and the body is about the size of the average bar of the bar before the breakout. Not just a tick tock。好，算了。我们先那样子，今天阅读够了。
This is a list of signs that a breakout will be weak. It's pretty much the opposite of those on the prior slide. This is for a bull breakout. Here, a bear breakout. The more of these things that are present, the more likely the bear breakout will succeed. So these are signs of a strong bear breakout. And here is an opposite list. The more of these things that are present, the more likely the bear breakout is weak and it will fail and reverse. I just gave that long list of signs of strong and weak breakouts for both bull and bear trends. I'm now going to be talking about whether or not a breakout will succeed or whether it will reverse. Although it might be hard to believe, this is the single most important concept in trading. Will a breakout succeed or fail? The market is constantly probing. Is the price too low? Is the price too high? So it's constantly trying to break out. And the breakouts succeed, the breakouts fail. Here we broke out, we went down further. Here we tried to break out, but we reversed up. Here we broke to the upside, reversed down.
1, 2, 3.
The market's constantly probing to find the appropriate price. Where is the right price? What price is too high? What price is too low? This is the basis for everything that we do as traders. Do we want to enter the trade? Do we want to bet on an opposite trade? Where are we going to put our stop? If we got a breakout that failed to the downside and we reversed up strongly, our stop is going to be down here. Where are we going to take profits? Well, maybe we'll take profits near the top of the bear breakout. It's the basis of everything that we do as traders. We have a bear breakout, we get follow through selling, we have another bear breakout, big tails, and then we have a bull doji bar here. This is a triangle, 3 pushes down, 1, 2, 3, and we have a bear breakout. A triangle late in a bear trend usually becomes the final bear flag, and the breakout usually does not go very far before there's a reversal, at least back to the apex or middle of the triangle. Here we have a bear breakout, it failed. We reversed up in a series of bull bars or doji bars, the absence of bear bars. The failed bear breakout was followed by a successful bull breakout. Every bull close, this close was at the close of this bar. This close above the close of this bar. Every close is at or above the close of the prior bar. A bull bar closing on its high, and then a pair of very big bull bars closing on their highs. This is where the bears finally gave up, and traders decided that we're now in a successful breakout. I think it's important to realize that every trend eventually ends with some kind of a failed breakout. Remember, every trend bar is a breakout of something, and every trend fails sooner or later. And every tail is a failed breakout. The market tried to go one way, and it reversed before the bar finished. Here we have a bear breakout, bear trend, a pullback, an attempt to reverse up, so it's a bear flag, and we broke out. We broke to a new low, but look at this, we reversed up. So the breakout to a new low failed. And now we have a double bottom, a slightly lower low double bottom, or a double bottom. This bull doji is probably not strong enough to reverse these two bear bars. This reversal is probably minor, and therefore a leg in a bear flag or in a trading range, and the market probably will continue sideways to down. This bull bar, a trend bar, every bull trend bar is a bull breakout. It's a breakout above this double bottom, or at least above this buy signal bar at the double bottom. Another new low, another breakout, and a big tail on the bottom. At one point when this bar was forming, it was a big bear trend bar, big bear black bar. Like it looked like this, but when it closed, it was this, a small bull body, and it closed above the breakout point. So it was a breakout, but it failed. Whenever you see a failed breakout, you have to be thinking, is the failure going to lead to an opposite trend, like this, or is it simply going to lead to a pullback, a bull flag, and the trend will then resume? Here, we have a failed bull breakout. At one point, this was a bull bar, but it closed on its low, and now it's a bear bar. It's setting up the possibility of a reversal of this bull breakout. So this bull breakout is now failing. So bull breakout, a bear bar closing on its low. This could be the start of a bear trend. Here we have a bull breakout with a tail on top. This bar traded below its low. The bears are trying to reverse the bull trend. They obviously did a bad job, but this pullback, this low going below that bar is an attempt to reverse the bull trend. So at the reverse of the bull, this bar is the failure. So it was a bear trend bar. Big bear black bar is a bull breakout. It's a breakout above and a big tail on the bottom. At one point when this bar was forming, it was a big bear trend bar, big bear black bar, like it looked like this. But when it closed, it was this, a small bull body, and it closed above the breakout point. So it was a breakout, but it failed. Whenever you see a failed breakout, you have to be thinking, is the failure going to lead to an opposite trend, like this, or is it simply going to lead to a pullback, a bull flag, and the trend will then resume? Here, we have a failed bull breakout. At one point, this was a bull bar, but it closed on its low, and now it's a bear bar. It's setting up the possibility of a reversal of this bull breakout. So this bull breakout is now failing. So bull breakout, a bear bar closing on its low. This could be the start of a bear trend. Here, we have a bull breakout with a tail on top. This bar traded below its low. The bears are trying to reverse the bull trend. They obviously did a bad job, but this pullback, this low going below that bar, is an attempt to reverse the bull trend. So at this moment, when this bar traded below that bar, it was a failed bull breakout. When this bar traded below this bar, it was a failed bull breakout. So bull breakout, and then reversal. Bull breakout, and then reversal. These reversals, however, became bull flags. They led to trend resumption up. So reversal attempt, but it reversed into a minor reversal, a bull flag. Failed bull breakout, a reversal attempt, again, minor reversal, became a small bull flag, and the bull trend continued higher. Look at this one up here. Take a look up here. Failed bull breakout, and this time, instead of leading to a bull flag, it tried to be a bull flag here. In fact, it led to a trend reversal. So here we have failed bull breakouts creating bull flags. Here we have a failed bull breakout creating a trend reversal. Traders are constantly trying to determine whether a breakout will succeed or reverse. Because if you can create a trade with a mathematical advantage. You can create a trade with a favorable trader's equation. You have an edge. Think about this for a second. Bull bar closing on its high, bull bar closing above its midpoint. Tail, yes, but still a bull bar. Same with this, tail, yes, but a bull bar. We have 3 consecutive bull bars all closing above their midpoints. 2 very big bars. This open is above the close of this bar. So as soon as this bar closed, traders hit buy the market. They didn't place a limit order, they just hit buy the market. This open is above the close of that bar. Again, a lot of urgency. Bulls are very eager to buy. Do you think this reversal is going to be a bull flag or a bear trend? Well, the pull back after a strong bull breakout, high probability there'll be at least a small second leg up. If the breakout's strong enough, there's probably going to be a measured move up, maybe from the open of the first bar of the breakout to the close of the final strong bar of the breakout and measured move up, which is what we got here. Since the probability is high that this failed breakout will fail, in other words, the attempt by the bears to reverse the market will fail, and this will become a bull flag, traders will look to buy. They'll place a buy stop just above the high of this pullback bar, or they may want to buy above the bull bar, so they may buy above the high of this bull bar and enter right there. Strong bull breakout, pullback, breakout, pullback, breakout. So a spike in channel, wedge, breakout. Pullback, second push, pullback, third push. Very common pattern, and it very often tests down to the bottom of the channel. So spike, pullback, channel, and traders look for a reversal down to test the bottom of the channel, and then usually it ends up in a trading range. In any case, if you're long, you probably will get out below this strong bear bar, given that it's a wedge top, and given that we're probably coming down here. And if you're not long, but you're a fairly aggressive bear, you'll sell on a stop right below that bar. You'll sell the reversal down, hoping that will test down to the bottom of the bull channel. down here. And if you're not long, but you're a fairly aggressive bear, you'll sell on a stop right below that bar. You'll sell the reversal down, hoping that will test down to the bottom of the bull channel. Now, clearly a strong bull breakout. As I said, opening above the close of the prior bar, big bull bars closing on their highs, consecutive bull bars, 2, 3 consecutive bull bars. How do you get long during a strong breakout like this? Well, there are lots of ways to get long. Many traders will simply buy at the market. As the market's going up, they just hit the button buy. They just buy at the market. Other traders will wait for bars to close, and then they'll buy at the market. They'll wait for the close of a bull bar, they'll buy at the market. And they'll even buy the close of a strong bear bar, betting that the reversal will fail. A lot of traders are happy to buy the close of consecutive bear bars as long as they're not too big. If these two bear bars are closing down here, they will not buy. But if the bear bars are small compared to the bull bars, they'll buy, because a lot of times traders will think, it probably has to have 3 or 4 consecutive bear bars to really reverse this strong bull breakout. And therefore, if it has 2, it does not have 3. It probably will not get 3. Therefore, I'll buy the close of 2, betting that it will not get 3. So traders will buy the close of bull bars and the close of bear bars. They'll both buy below bars and above bars. They'll buy below bars, betting that the reversal attempt will fail, so that the bears who sell below that bar will lose money. Bulls buy that. They'll buy exactly what the bears are selling, betting that the bears will lose. And then they'll buy above a bar because they believe the bears who did sell will give up. The bears will say, uh-oh, I made a bad trade. I got to buy back my shorts. So they'll buy above the high of the prior bar. Others will buy above the high of a bull bar. Some will simply buy simply because it's a bull flag. It's a minor reversal down. So some traders buy the reversal up, betting that the reversal down is simply creating a bull flag. They're buying pullbacks or reversals up from pullbacks. Whenever you see a strong bull breakout, you have to be ready for a bull flag, and you have to be ready for the bull flag to break to the upside. You place a buy stop just above the high of the prior bar, hoping that if the market resumes up, you'll place a buy stop at the high of the prior bar. When this bar closed, you had bulls placing a buy stop above its high in case the market went straight up. Then we have a pullback bar, low below the low of the prior bar. Bulls now lower their stop from above this bar to above this bar, and they get filled over here. Then we have a pullback bar. You'll place a buy stop at the high of the prior bar. When this bar closed, you had bulls placing a buy stop above its high in case the market went straight up. Then we have a pullback bar, low below the low of the prior bar. Bulls now lower their stop from above this bar to above this bar, and they get filled over here. So you have to be prepared for the resumption of the trend back up. Strong bear trend. We have a bull breakout, but 2 bear bars, 3 bear bars, close below the low of the past 7 or 8 bars. The bear bar getting bigger. In a bear trend, different ways to get in. One is simply sell at the market. At some point, as this bar is falling, you have to conclude the bulls are trapped. They have to get out. This bar is falling very fast, and it's because we fell below the bottom of this bull breakout, and a lot of the bulls are deciding that they're on the wrong side of the market. And the bears see that as well. They assume that maybe we'll fall for a measured move down based upon the height of this bull breakout. That would be somewhere down here. They know we're going lower, so a lot of traders, if they're quick to understand what's going on, that this is a reversal, a failed bull breakout, they'll simply hit the button, sell at the market. Other traders prefer to sell the closes of bars. They'll sell the close of a bear bar, betting that we're going lower. And whenever they see a bull bar closing near its high, they'll sell that as well, betting that the bull reversal attempt will fail, become a bear flag, and lead to a trend down. These bull bars, we have 3 bull bars here, but the bull bars are not big, certainly not big relative to this. The bears will sell the bull closes, betting that this is a minor reversal and that the bear trend will resume down. Traders will also sell above the high of the prior bar, and they'll sell below bars, betting that if the market falls below the low of the prior bar, the bear trend probably is starting to reverse down. Bear flag, so they place a stop to go short just below the low of the prior bar, betting that the breakout of the bear flag will be a resumption of the bear trend. Bear flag, it's a bull channel, and we're breaking below the bottom of that bull channel, bear flag, and the bears bet that the trend will resume down. Weak rally, minor reversal, probable bear flag. Worst case, probably a trading range. If a rally looks weak, you have to assume it's a bear flag, and traders have to be prepared to go short. When this bar closed, traders placed a stop order to go short below its low, not filled. When this bar closed, traders placed a stop order to go short just below its low, not filled. And the same with this bar, and this bar. And here, they did get filled, finally. But that's traders who are prepared to go short. You have to be thinking about it, and you have to be placing your orders. You have to be ready to catch the trade. In this video, I talked about second leg traps. where the market makes one leg, pulls back, and then has an even stronger second leg, but the second leg leads to a reversal instead of a measured move. It traps traders into buying high if it's a strong second leg up. It also traps traders into selling low if it's a strong second leg down. Second leg traps are common in broad channels and especially common in trading ranges. I also talked about signs of strong breakouts. I then talked about characteristics of breakouts that lead traders to believe the breakout will be successful or that it will reverse. I'm Al Brooks. Thank you for watching the Brooks Trading Course. This is Al Brooks. Thank you for watching the Brooks Trading Course. This is the 5th of 8 videos on breakouts.
Week.
The points I wanted to discuss here are, first, the distinction between an exhaustion gap and a measuring gap. If there's an unusually big breakout late in a trend, 20 or more bars into a trend, traders have to decide between an exhaustive end of the trend and a reversal, or possibly a breakout into an even stronger trend. If a breakout is weak, it's more likely to have a deeper pullback. If a breakout is strong, it's more likely to have a shallow pullback. Finally, I want to talk about a breakout test. When there's a breakout, it's a surprise. It's a low probability event. There's usually some kind of a pullback that tests the resolve of the breakout traders. Will they enter again, or will they not enter, and will there then be a reversal? I talked about big trend bars and breakouts, and sometimes they can lead to a measured move up, a big continuation of the trend. Other times they can be a sign of an exhausted trend, and they could lead to a reversal. So is a big trend bar a big continuation of the trend? Other times they can be a sign of an exhausted trend, and they could lead to a reversal. So is a big trend bar an exhaustion gap or a measuring gap?
挑战100天内成为交易员是有可能的。挑战100天内。
Diva is a female version of a hustler, of a hustler, of a hustler. Diva is a female version of a hustler, of a hustler, of a hustler. Stop the track, let me say facts. I told you give me a minute and I'll be right back. You know you're around the world and they say that I couldn't get. I'm so sick of filthy with bitches I can't speak. I'm going talking shit like I just got a.
Attention players, I will now explain who say well. You'll find out the square pillar, you'll find the triangle pillar, and finally end on the circle pillar. On each stage, you'll play a multi game. Starting with the square pillar, you will enter the stand bar. If you are the first person to push one of the players will be so high, the sound will end, and all remaining players will move on to the triangle pillar.
吸管，藏在比它厚一点点的钢层后面。
早安，早安，早安，钟哥，早安，钟哥，你刚起床啊？
आज ये चींटी के साइज का कैमरा
Here we're either in a trading range or bull trend, and sometimes they can lead to a measured move up, a big continuation of the trend. Other times they can be a sign of an exhausted trend, and they could lead to a reversal. So is a big trend bar an exhaustion gap or a measuring gap? Here we're either in a trading range or bull trend, and then we see this, a very big bear trend bar closing on its low, closing below the low of the past 10 bars or so. Is this more likely exhausted bears who are tired from selling, or is it the start of a bear trend and more likely a measuring gap,
A measuring gap
between this close, that low, a gap between this close, that low, a gap between this close, that low? It's a strong breakout. The context is good. We have trapped bulls who thought we were going to get a successful bull breakout, and we have a very strong reversal. 3 consecutive bear bars closing on their lows or near their lows, and now we have an even bigger bear bar closing below the lows of all of these bars. Chances are bulls are trapped into a losing trade, and many bears have not sold yet, and they're trapped out. The odds are this gap is going to lead to a measured move down, maybe from the height of the buy climax to the bottom of the buy climax, and then a measured move down. This big bear trend bar is a sign that the bulls are giving up. It's a give up bar, and it's a strong bear breakout. It's probably a measuring gap. The top of the buy climax, the bottom of the buy climax. The bulls are hoping for a double bottom, even though there's no obvious attempt at a double bottom. Whenever I see a strong bull breakout and then a reversal below the low of that bull breakout, I think of it as a failed double bottom. And if it broke above the neckline, let's say we bounced here and formed a double bottom, this would be the neckline. Traders would look for a measured move up. And if instead it breaks below the bottom of the double bottom, traders will look for a measured move down, which is what we got. This is early in a trend. Suppose you get a strong breakout late in a trend. Well, the chance becomes greater that the big breakout is a climax and that it will lead to the end of the trend or even a reversal. Here, we got a big bull trend bar. We don't know how late in the trend it is, but it's certainly about 7 or 8 bars. in the trend. If it was 20 or 30 bars in the trend, and you see the strongest bull bar, the biggest bull body, coming late in the trend, it's usually more likely an exhaustion gap, a gap between the close of this bar, the close of the prior bar, the close of this bar, and the swing high over here. That gap will probably close, which it did right here. Below this bar, close the gap. Above this bar, below this bar, fell below this high, and it closed that gap as well. It's therefore an exhaustion gap. And exhaustion gaps mean that the bulls are tired, they're exhausted. That doesn't mean the market will turn into a bear trend. In fact, most of the time when you have an exhaustion gap, the market goes sideways. But if the context is good, and if you start to get consecutive big bear bars, the odds are you're going to get a reversal and not simply a pause in the bull trend. Look at this bar. What do you see? The biggest bull bar occurring 20 or more bars into a bull trend. Whenever that's the case, you have to be wondering, is this more likely the start of a new leg up or more likely an exhaustive end of the bull trend, an exhaustion gap? Whenever I see the biggest bull trend bar coming 20 or more bars into a bull trend, I believe it's more likely an exhaustive move instead of an acceleration into a new, even stronger bull trend. At this point, you're wondering, okay, this low did not fall below that high, so maybe it is a measuring gap. Maybe we get a measured move up from this low to this high, which is the bottom of this gap. Or is it more likely big bull breakout and then bear reversal bar, increasing the chances that it's an exhaustion gap? When I see this, as soon as I see a big bull bar late in a bull trend, I assume the odds are it's an exhaustion gap, a buy climax. And then if I see it followed by a big bear bar closing on its low, the odds are high, 60% or more, that the gap will close. That will fall below the high of the prior bars and close the gap. Here we have an attempt to reverse up into a bull trend, and then that will fall below the high of the prior bars and close the gap. Here we have an attempt to reverse up into a bull trend, and then we have an attempt to resume the bear trend down. It's a big bear bar, closing on its low. Is it more likely an exhaustive end of this sell-off, or is it more likely a breakup below a double bottom, leading to a measured move down? Look at the next bar, a bull bar closing on its high. Terrible follow through. But at this point, you got to be thinking, we got a bear trend, a strong bull breakout, and a pullback that's reversing back up. This is probably a higher low major trend reversal. We have a double bottom bull flag, broke to the downside, reversed up. Probably a failed wedge bottom. First leg down, second leg down, third leg down. Whenever you have a double bottom that breaks to the downside and then reverses up, it's effectively a type of wedge. So that also is in favor of the bulls. This big bear trend bar closing on its low and below the low of this group of 7 or 8 or 10 bars, probably an exhaustion gap, probably a failed bear breakout. Here we're in a broad bull channel. We have high, higher low, higher highs, higher lows, and now the trend is accelerating upward. We have 3 consecutive bull trend bars, the strongest series of bull trend bars occurring maybe 40 or 50 bars into the trend. Yet, look to the left. We're still not above all of the bars. So you have to be thinking that this is possibly a second leg trap, a strong bull trend occurring as a second leg. First leg up is a weak bull channel, a broad bull channel, with lots of two-sided trading. And now we're accelerating upward. And we have the strongest series of 3 bull trend bars, and we have the biggest bull trend bar occurring more than 20 bars into a trend. And you look to the left, we're not above anything. We're still in the trading range. This is more likely going to be an exhaustive end of this trend than the start of an even stronger bull trend. So it's more likely an exhaustive buy climax than it is a measuring gap. Here we have a micro double top. The bulls tried to reverse up. Does this look like a strong reversal up? No. Where are the consecutive big bull trend bars closing on their highs? This looks like a bull leg in a trading range. And now we have a double top. It's still bullish at this point. Probably we're going to try to go higher. But once you see this big bear bar is reversing that big bull bar. We have a reversal up, down. This is probably going to end up as an exhaustion gap. And this is a sign of bulls giving up. We're probably going to get at least a second leg down. That second leg will probably close the gap. Then this becomes an exhaustion gap. And maybe the entire 3 bull bars becomes an exhaustion gap. Here we have a trend up and then a trend down. And every trend bar is a breakout. Here we have a breakout, and it led to higher. Prices. Here we have a bear breakout, and we got lower prices. Bull breakout, higher prices. This is looking pretty good for the bears. We have a bear bar closing on its low, and we have a second bear bar closing on its low. This looks like decent follow through and possibly a measuring gap. The high of this bar did not get above the low of that bar, and therefore this is potentially a measuring gap. But then the next bar, bull bar closing on its high, and then we close the gap. By this bar going above that low, we've closed the gap, and this is therefore a failed bear breakout and an exhaustion gap. Here, the biggest bull trend bar, more than 20 bars into a bull trend. Is it more likely the start of an even stronger bull trend, or is it more likely an exhaustion gap? At this point, we pulled back for a couple bear bars and got a good bull reversal bar. We still have an open gap between this low and this high, so this still could be a measuring gap. Even though we fell below these highs, we still held above this high, so it's still a possible measuring gap. However, whenever I see the biggest bull trend bar occurring 20 more bars into a bull trend, the odds are it's going to be an exhaustion gap. Here, a doji bar, not a strong sell bar, but here we have a bear bar closing on its low. That makes me think that the odds are this will end up as an exhaustive end of the trend instead of the start of an even stronger trend. Remember, most buy climaxes do not lead to bear trends. They usually lead to a trading range. We have big up, big down. big up, big down means big confusion. Confusion is a hallmark of a trading range. So most buy climaxes, most sell climaxes are followed by trading ranges, not necessarily reversals. Here we have a big bear trend bar, and to me it looks like the bulls are giving up. They have a rally that lacks consecutive big bull trend bars, a lot of prominent tails, and a possible double top. So we have a double top after a buy climax. Here, a big bear bar. This looks like the bulls are giving up, the bears are getting aggressive. It could be the start of a spiking channel down, spike pullback channel. In fact, spike pullback protracted channel. Whenever I see a buy climax that's starting to reverse, I always think the first target is just below the low of the buy climax bar. The bulls try to get a double bottom there. They tried, failed, and the bears want a strong breakout below that double bottom, and then they want to fail double bottom and measure move down. So we're trying to get a double bottom. The bulls want to break out above the neckline, which is the highest point in between. So they want to measure move way up off the top of the screen. And the bears want the double bottom to fail, and they then want to measure move down based upon the height of the double bottom. The neckline of the double bottom, the bottom of the double bottom, the bears want to measure move down. In any case, whenever you have what is probably going to be an exhaustive buy climax, the first target is the bottom of the buy climax bar, and the bears who sold up here take partial profits, and that's why we reverse up. Aggressive bull scalpers buy there, betting that we'll get at least a high enough bounce for a profitable scalp. I think it's important to be aware of context in price action. Here we have a bull bar, a bigger bull bar, a bigger bull bar. So should you be scalping here, or should you be thinking that, this might be the start of a bull trend? And if it's the start of a bull trend, you want to be scalping or swinging. Usually when you get a very strong bull breakout with good context, it's going to lead to some kind of a measured move up. The first thought I always have is the open of the first bar of the strong breakout to the close of the final bar of the strong breakout, leading to a measured move up. This is the final bar of the strong breakout. We have another bull bar and another one here, but this one has that big tail on the top of the bar. This is, to me, the end of the very strong breakout. In any case, traders have to be confident, 60% or more, that the market is going higher, and therefore, it's better to be swinging at least part of your position. The bears are giving up. Through here, there's trading taking place. Bears want the measure move down. In any case, whenever you have what is probably going to be an exhaustive buy climax, the first target is the bottom of the buy climax bar, and the bears who sold up here take partial profits, and that's why we reverse up. Aggressive bull scalpers buy there, betting that we'll get at least a high enough bounce for a profitable scalp. I think it's important to be aware of context in price action. Here we have a bull bar, a bigger bull bar. There's trading taking place, which means bulls are buying and bears are selling. And as the bears see this start to go up, more and more bears give up. The market is always in long. The odds are we're going higher. They're selling. The bears are giving up. Through here, there's trading taking place, which means bulls are buying and bears are selling. And as the bears see this start to go up, more and more bears give up. The market is always in long. The odds are we're going higher. Buying has a strong trader's equation. A successful breakout means that the bulls have a successful, profitable trade. The trader is satisfied. Bears are giving up, bulls are making money. We have a bear breakout here, and it's a strong breakout, and the context is good. Here we had a lot of trading range price action, maybe a higher low in an attempt to resume this rally, so leg one pullback, maybe leg two. Instead, we got a big surprise, a pair of consecutive bear bars, big bear bars, closing on their lows. At a minimum, they'll probably lead to at least a measure move down from the open of the first bar to the close of the second bar, so a minimum target is down here. Traders are confident that the market is going lower. Traders should be swinging at least part of their trade. The bulls are giving up. The bulls are hoping for a higher low and a second leg up. First leg pullback, second leg. Instead, they gave up, and they're quickly selling. The bears are selling as well. Everyone sees that the momentum down is very strong, and the market has changed. So instead of a possible bull flag, we have a very strong bear breakout. It's probably the start of a bear trend. Selling, a very strong trader's equation. And the successful breakout simply means that traders who shorted made money. The traders are satisfied. So we have a strong bear breakout, and it was successful. We went lower. Successful because the bears who sold made money. When the market's in a strong breakout, the pullbacks are usually small. When the market is in a weaker breakout, and it was successful, we went lower. Successful because the bears who sold made money. When the market's in a strong breakout, the pullbacks are usually small. When the market is in a weaker breakout, the pullbacks can be deep, and the market can look much more like a trading range. Take a look at this. We have a breakout with a tail close at that low instead of below the bar. We have consecutive bear bars, again, big tail. Does this look like a strong bear breakout, or does it look like a weak bear breakout? It looks weak. We have a lot of overlap, the high of this bar, the close of this bar, the high of this bar, the lows of the past three bars. The bars are not particularly big. The bear bodies are getting smaller, here, here. That generates confusion. Traders are wondering, is this really the start of a bear trend, or is it more likely a bear leg and what will end up as a trading range? Consecutive bear bars with prominent tails, and the bodies are small. And because the bear breakout is weak, there's less certainty, less conviction on the part of the bears. A lot of the bears don't want to sell at the low. They only want to sell higher. Bulls see the weakness, and they'll buy below bars. They'll buy bear closes, betting that the bears will not get consecutive closes. They'll buy reversals up, betting that this is probably a bear leg and what will become a trading range. We're rallying here, but what do you see? Big bull bar, but followed by only a bull doji, and then by a bear bar. Another bull bar, but smaller than the first. Was it followed by a doji? And we did not break above the top of the sell climax. We're breaking out to the upside, but look, weak rally, bad follow through, breakout, bad follow through, and lower high. So possible double top bear flag, possible bull leg, and a trading range. Traders will see that, and bulls will take profits, and bears will start to sell. So it's either a bull leg and a trading range, or we have a lower high. It could be a bull leg in a broad bear channel. Here we have a bull breakout here, another bull breakout here, prominent tails, the absence of consecutive big bull bars closing in their highs, and we're still below the top of the bear breakout. This looks like a bull leg in either a trading range or in a bear flag. We're trying to get a second leg up, decent bull bar, but look at this, the follow through, a pair of dojis, and then another bull breakout, but big tail followed by a bear bar. This looks like a weak breakout, probably a bull leg in a trading range or in a bear flag. Weak bull breakout. We have a bear channel, bull breakout. You have to assume pullbacks will be deep and last a lot of bars. Weak bull breakout. You have to assume the pullbacks will be deep or last a lot of bars. So possible trading range. Here we're in a broad bull breakout, full bar, the top of the bear. Here we have a lower high. It could be a bull leg in a broad bear channel. Leg in a trading range, or we have a lower high. It could be a bull leg in a broad bear channel. Here we have a bull breakout here, another bull breakout here, prominent tails, the absence of consecutive big bull bars closing in their highs, and we're still below the top of the bear breakout. This looks like a bull leg in either a trading range or in a bear flag. We're trying to get a second leg up, decent bull bar, but look at this, the follow through, a pair of dojis, and then another bull breakout, but big tail followed by a bear bar. This looks like a weak breakout, probably a bull leg in a trading range or in a bear flag. Weak bull breakout. We have a bear channel, bull breakout. You have to assume pullbacks will be deep and last a lot of bars. Weak bull breakout. You have to assume the pullbacks will be deep or last a lot of bars. So possible trading range. Bull breakout. You have to assume the pullbacks. Will be deep or last a lot of bars. So possible trading range. Here we're in a broad bull channel, higher low. But let's take a look at the bear breakout and the bull breakout. We're selling off. We have a double top, slightly lower high double top, neckline. We broke below the neckline, but look at the breakout bar, a bull bar. And look at the sell-off. We have consecutive bear bars, but not particularly big. We have a big bear bar here, but then a bull bar. We have consecutive bear bars here, but then a big bull bar. Here, same thing. A pair of bear bars, not very big. A pair of bear bars. This one's big, but did not close below the neckline of this double top, and it was followed by a bull bar. Whenever I see a bear breakout that does not look very strong, I assume there'll be a deep pullback, or at least a pullback with a lot of bars. Bear breakout, not very strong. Here we got a pullback that was at least 50% up. Big bear breakout, and expect a deep pullback. It's either a bear leg in what will become a trading range, or a bear leg in what will become a weak bear trend. Here, it became a bear leg in what was a trading range to this point, and then we got a bull breakout. Bear breakout, but probably bear leg in a trading range, and not likely to start with a strong bear trend. Here we got a bull breakout bar. We're trying to break above the top of this bear channel, a higher low, double bottom, maybe a higher low major trend reversal. But look at the follow through. 4 bull bars, yes. But where are the consecutive big bull bars closing on their highs? Traders are confused. Maybe it's big down, big up, big confusion, and trading range. This is not a strong rally, not a strong bull breakout. So you have to assume we get a deep pullback. Here we pull back to about 50%. Here we have a good looking bull bar, but terrible follow through. So you have to assume a deep pullback. In fact, we got a reversal instead of simply a deep pullback. bear breakout, deep pullback, it remained a trading range until this point, so it remained a trading range for a lot of bars. A rally, but no consecutive big bull trend bars closing on their highs. Prominent tails on tops of the bars. A lot of trading range price action to the left. The middle of all of that price action, so the middle of a trading range. This is more likely simply a deep pullback in this bear trend than the start of a bull trend, or it's a bull leg in a trading range rather than the start of a bull trend. Ultimately, we did continue up, but at this point, the odds are it's probably a bull leg in a trading range. You have to assume there'll be a deep pullback or the market will continue sideways for a lot of bars. Here we pull back about 50% of the height of the bull breakout. Probably a bull leg in a trading range. And the market did remain in a trading range for about 10 more bars or so. I want to talk a little bit about breakout tests when there's a very strong breakout. For example, if there's a bull breakout.
Pencil.
And the market pulls back into the area where the bulls bought during the breakout, will they buy again? If not, the breakout could be an exhaustive move and it could lead to a trend in the opposite direction. We have a rally and a very strong reversal down and move in account, and the market pulls back into the area where the bulls bought during the breakout, will they buy again? If not, the breakout could be an exhaustive move and it could lead to a trend in the opposite direction. We have a rally and a very strong reversal down and a very tight bear channel, and in fact, trend in the area where the bulls. I want to talk a little bit about breakout tests when there's a very strong breakout. For example, if there's a bull breakout and the market pulls back into the area where the bulls. Bought during the breakout, will they buy again? If not, breakout could be an exhaustive move, and it could lead to a trend in the opposite direction. We have a rally and a very strong reversal down and a very tight bear channel. And in fact, there are 9 bars here without a pullback, a 9-bar bear microchannel. And in addition, most of the bars are bear bars closing near their lows. This is a breakout. It's a breakout below a trend line below these bars, or you can simply call it a reversal, and every reversal is some kind of a breakout. The bears are selling here. They're selling aggressively. We're not getting any pullbacks. This is a surprise move. When the bears are surprisingly strong, the odds are they'll get at least a small second leg down. At some point, there's going to be some profit taking. The bears will take some profits, and the bulls will buy hoping for a scalp. Anytime you get a strong breakout, whether it's 1 bar or 9 bars, it's a surprise. Strong breakouts occur only maybe during 10% of all the bars on the chart. It's a low probability event, and that usually requires some kind of a test. We have a breakout, and at some point the market is going to come back into this breakout area to see if the bears are willing to sell again at this price. The bears thought it was a great price to sell at this point in time, but when the market gets back here later on, will they think the same? Will they sell again? If they do, we'll get a resumption of the bear trend. If they do not sell aggressively, they'll be overwhelmed by the bulls, and we could get a reversal. This is the breakout point. We broke below that low over here, and some bulls will buy that low, betting that the breakout will fail. And these bulls, I call them limit order bulls, buying at a low, are looking to buy more lower. They're buying hoping it immediately reverses up. But they're buying because they believe at some point it will reverse up. And if they buy here and they buy more lower, like above a strong bull bar, they expect it to come back here to the breakout point, and that will allow them to get out break even on their first entry and with a profit on their lower entry. The bulls tried to get a reversal here, but with a 9-bar bear microchannel, the odds were high. The first reversal up would fail. They tried to get a double bottom, bull bar, and it broke below. And a lot of the bulls would get out below this bear bar or below this bull bar, and a lot of the bears would sell as well. It's a low 1 bear flag, a reversal up, and bears would sell either below this bar or below a bear bar closing near its low. A lot of the limit order bulls who bought here gave up either here or here and took a loss, or they gave up below this bar or on this close. The bulls tried to get a reversal, and they failed. And once the market started to resume back down, that left a space between the high of the pullback and the low of the breakout point, and there's a gap. Therefore, these bear bars are probably creating a measuring gap. And you can see at this point, we've already reached a measured move based upon the high of the sell climax, the breakout point. We hit a measured move down. We have a big bear bar here after the low 1 bear flag. It's strong enough so that you'd expect at least some kind of a second leg down, which we're getting, and a measured move down, which we got almost by the close of that bear bar.
At some point, get pulled back because the bear take the practical profit and bull buy. Every breakout is a price, which means a low probability event. There is always a pullback, and over several it can be the next bars or 100 bar. Will bears out again, where they just saw it, or will it be reversed out? Some bulls are limit order bulls who bought breakout get betting will fail. or buy more lower, like above the strong bull bar. They need rallied above breakout point to get out break even on the first entry, then with profit with a lower entry. Bears sold below low one bear flag. Bears sold below low one bear flag. Middle limit order scalp in bull, give up and exits with loose. This was likely after very strong bear breakout. Pullback create gap for likely major move down. Create big bear bar, 60 chance have the second leg down and some kind of major move down.
This is what followed. A very tight bear channel. The bears sold aggressively and relentlessly in here. And what will the market?
1, go back 2, second entry.
Do when it tests back up into this area where the bears thought it was such a great price to sell. And you can see what happened. I'll talk about that. I said you had limit order bulls who bought this low, and they were waiting for a strong bull bar closing on its high to
They're waiting a strong bull
buy more. They have a loss at this point from their first buy, and they're looking for the market to come back to their first buy, test the breakout point, and that will allow them to
test the breakout point,
get out break even, and then with a profit on their
and break even.
lower buy. Other bulls did not buy this because we had 5 or 6 bear bars. They knew we were going lower. However, they know some bulls did buy here, and they'll buy more lower above the bull bar. And the bulls who did not take the first buy, some of them will take this buy, expecting the market to come back to the original buy. We have this bear breakout. Will the bears sell again when it gets back into this area where they broke out earlier? We have bulls selling here. The bulls who bought here will get out break even at the original entry price. If they bought more lower, they'll get out profit. Other bulls who bought above here know that there will be bulls selling out here, and they'll be looking to take a profit there as well. This is where the bears sold originally, and now we've rallied back up into that price, and we're testing it, and we're discovering that the bears are trying to sell again. However, their sell-off was not particularly good. For the bears, you can call it a parabolic wedge with 1, 1, or 2, pause, 3, or 1, 2, 3, and that's the entry bar, and you can see it did not sell off very strongly. And that's not a surprise because this rally is so strong, it looks like the bulls probably will get a second leg up. Now we have another rally, so rally, pullback, second leg up, and the bears now have either a double top with this high or a wedge lower high with this high, 1, 2, 3. A lot of wedges begin before the bear trend has ended because there's often a transition between a bear trend and a bull trend, and there's some overlap when it's both in a bear trend and in an early bull trend. We also have a micro double top here, and again we're in an area where the bears thought the price was good to sell, and they're selling again back into the area where they sold originally during that surprisingly strong breakout, and the bears still feel that it's a good price to sell, even though now we're 20 or 30, 40 bars later. Is confirming the strength of the bears. This original breakout, the entire leg down, in fact, is a very tight bear channel, and on a higher time frame chart, it's simply 1 or 2 or 3 big bear bars, depending on which time frame you choose. And on that same chart, this would simply be a 2-legged pullback, maybe 4 or 5 bars. So not all that dramatic buying, simply a test back into the breakout. This is the same chart, and I want to talk a little bit about the bulls. Here, the bulls have a pretty good breakout, strong enough so that we'll probably get at least a small second leg up. They surprised everyone with a big bull trend bar here, a breakout. The breakout continued here. At some point, there's going to be a pullback. Traders want to know, will the bulls buy again? They bought aggressively here, a surprise, and now we're testing back into that level where they began buying. Are they going to buy again? And they did. High 2 bull flag, high 1, high 2 with a decent bull bar, testing the breakout point above this high and these highs, and the bulls got a second leg up. The bulls have another breakout, and what will happen when there's a pullback back into this breakout where the bulls thought it was a good price to buy? Well, they bought, but they were overwhelmed by the bears, and the bears got a swing down. You can see the bears sold aggressively. The bulls had a high 2, and they gave up here. And the higher time frame bears who sold here are now selling strongly, trying to get trend resumption down. This is a major higher low for the bulls. As long as the market gets pullbacks that stay above it, the bulls have a bull trend. For example, they have a bull breakout here. The bears tried for a reversal. The bulls overwhelmed them. We held above this major higher low, the bottom of the buy climax, and we got another leg up. This time, we have a bull breakout. The market tested back into it. The bulls bought a little bit, but they were unable to keep the market from falling below the buy climax low, a major higher low, and we fell. In fact, we fell for about a measured move down. Measured move down based upon the height of the buy climax, or you can view this as a double top, breaking below the neckline, and falling for almost a measured move down based upon the double top and the neckline. I began by talking about big breakouts late in trends and whether or not they are an exhaustive end of the trend or a measuring gap leading to an even stronger trend. Next, I move on to talking about weaker breakouts. If a breakout is weak, every breakout eventually has a pullback. A weaker breakout usually has a deeper pullback. And finally, a breakout is a surprise. It's a low probability event. At some time, the market pulls back into the breakout. And will the breakout traders enter again? Will there be a resumption or will they not enter again? And will there be a reversal? I'm Al Brooks. Thank you for watching the Brooks Trading Course. This is a breakout. The breakout continued here. At some point, there's going to be a pullback. Traders want to know, will the bulls buy again? They bought aggressively here, a surprise, and now we're testing back into that level where they began buying. Are they going to buy again? And they did. High 2 bull flag, high 1, high 2 with a decent bull bar, testing the breakout point above this high and these highs, and the bulls got a second leg up. The bulls have another breakout. And what will happen when there's a pullback back into this breakout where the bulls thought it was a good price to buy? Well, they bought, but they were overwhelmed by the bears, and the bears got a swing down. You can see the bears sold aggressively. The bulls had a high 2, and they gave up here. And the higher time frame bears who sold here are now selling strongly, trying to get trend resumption down. This is a major higher low for the bulls. As long as the market gets pullbacks that stay above it, the bulls have a bull trend. For example, they have a bull breakout here. The bears tried for a reversal. The bulls overwhelmed them. We held above this major higher low, the bottom of the buy climax, and we got another leg up. This time, we have a bull breakout. The market tested back into it. The bulls bought a little bit, but they were unable to keep the market from falling below the buy climax low, a major higher low, and we fell. In fact, we fell for about a measured move down. Measured move down based upon the height of the buy climax, or you can view this as a double top, breaking below the neckline and falling for almost a measured move down based upon the double top and the neckline. I began by talking about big breakouts late in trends and whether or not they are an exhaustive end of the trend or a measuring gap leading to an even stronger trend. Next, I moved on to talking about weaker breakouts. If a breakout is weak, every breakout eventually has a pullback. A weaker breakout usually has a deeper pullback. And finally, a breakout is a surprise. It's a low probability event. At some time, the market pulls back into the breakout. And will the breakout traders enter again? Will there be a resumption or will they not enter again? And will there be a reversal? I'm Al Brooks. Thank you for watching the Brooks Trading Course. This is the 5th of 8 videos on breakouts.
You make me want a different personality.
Sigma boy, Sigma boy, Sigma boy. Sigma boy, Sigma boy, Sigma boy. We listen and we don't judge.
But I try to optimize for likes and actually like getting people in your tribe who you don't want to reach is probably not actually a good idea.
We listen and we don't judge. We listen and we don't judge. We don't judge.
That easy, babe, if you
Curry an open three. Got it. Curry for the lead. Got it. Suzanne Melton drives into the lane, laid it up and in.
这是最友好的一次砸人救球吗？奥尔达马接球后要失衡，就把球砸在东契奇的脑袋上，看这力度还不小呢。但东契奇并没有生气，反而觉得这事挺好玩，这就想到了东契奇的队友巴恩斯拼抢球权倒地后，勒布朗救球直接来个盖亚能量炮，把巴恩斯吓得身体都缩起来了。这是最友好。
Guys, I missed all my shots. You guys can blame me later. Guys, I'm
收高达2.07%，它将比收高近0.78%，效力于3级联赛的男子球员发起命运挑战。他本以为这场比赛轻松拿下，一开始还打得不显得像说太简单了，3个名男子都是不让分辨。此他开始根本不顾对方球气，局势就更为扭转。他被旗舰落入下风，比赛组织变得不饶人生。他开始不择手段，乱叫不存在的大队，还不停垃圾话。这名男子根本没给他们挑起点名节奏，只用实力说话。为了证明自己不受一切威胁，他在场上不断展现的扎手技巧，不利于对方内心带着强大攻击，试图利用身高优势被人单打，但前门前锋又无法得分，他只能用死角撞篮挽回。这就是你仔细看就会发现，这波的只要比他更少。不过你可能会纳闷，他们这到底是在演什么？其实他根本就不要击败对手，一心只想在这场大爱队参赛突破临界点。就像在不起对的时候就知道自己的大比赛，学的不需要模拟一次，第一次还手就可以慢慢把握。周围很多事情要跟随着他，这是跟着超级一个人记录来的。最让人遗憾的是，他最后这个成绩收获了最高纪录。你仔细看就会发现，这是命运的选择。
Your brother's actually here. Let's bring him out. I'm tired of the lies. Me lying to you, her lying to you, you lying to her. I'm tired of it. She's right. I did. And I lied to you from the start. Why did you sleep with your brother's girlfriend? I was getting needed. What were you getting needed for? In sleeping with my wife. Did you sleep with his wife? You think I can touch her?
啊。嘟嘟嘟嘟嘟嘟嘟嘟。
Al Brooks. Thank you for watching the Brooks Trading Course. This is the 6th of 8 videos on breakouts. In this video, I'm going to be talking about failed breakouts.
Failed breakout.
And how they can lead either to trend resumption or a trend reversal.
Sure.
Remember, a breakout is simply a trend bar. It can be 2 or 3 trend bars, it could be 10 trend bars. But a breakout is simply a trend bar. Here we have a breakout that lasted 3 bars. We have 3 consecutive bull trend bars. And then we have an attempt at a failed breakout. We have
Baby, can't you see we are what we need？ 不有栋大房子，没有你也只是栋空房子，少了一个住的梦，剩下他的未来老公，寻寻觅觅找了一段时间。
bear bar closing on a slow, and the bears are trying to end the breakout. They want the market to reverse back down. If this failed breakout fails to stop the trend, then you get trend resumption up. And that was the case here. We have a bull breakout, an attempt at failure, but the failure failed. So we have a failed bull breakout, yet it became a bull flag, and the bull trend resumed.
Breakout and fell. Fell breakout 1, 2 breakout.
You have a failed bull breakout, yet it became a bull flag, and the bull trend resumed.
Small breakout.
We have another bull breakout here. We have a bull bar, bull trend bar, so it's a breakout. We have consecutive bull trend bars. So the consecutive bull trend bars created an even bigger breakout. We had a 1 bar breakout, and now it became a 2 bar breakout. And it's followed by a bear bar. The bears are trying to get the bull breakout to fail and reverse. In this particular case, the failed bull breakout, so we have a bull breakout, it's failing, it led to a trend reversal down. Remember, we had a bull breakout here, a failure, yet it was followed by trend resumption up. Here, we have a failed breakout, and it was followed by trend reversal down. We have a bear channel, so a bull flag. It's about a 50% pullback of this initial rally. And we have a bull breakout. We have a bull bar here, so it's a breakout. And the breakout extended for another 5 bars. So you can say the 6 bar rally is a 6 bar bull breakout. And then here, we're in a bull trend, and we broke below a bull flag, and we broke below a bull channel. We have a bear breakout. 4 consecutive bear bars. None is especially big. This is pretty good. We have consecutive bear bars here, and then a doji. It's a breakout, but not particularly strong. Remember, every trend bar is a breakout, and every bar with a prominent tail is a failed breakout. Almost every bar on every chart is either a breakout, a failed breakout, a reversal, or a breakout pullback, a flag. Bull breakout, and the bears tried to reverse. The reversal failed, and it became a bull flag, and it was followed by trend resumption up. Traders will bet the breakout is strong enough, the contact's good enough, a 50% pullback in a bull trend. Micro double bottom, down on that bear bar, and then up and down on that bear bar. So bulls will look to buy a breakout above that micro double bottom. The neckline is the bull bar here, so they'll buy above the bull bar. It's the same price as buying above that bear bar. In either case, they're going to be buying with a stop. Maybe they'll buy the close of that bull bar. Maybe they'll buy 1 pip above the high of that bull bar. In any case, they're viewing this attempt at a failed bull breakout as a bull flag, and they're buying as it reverses up, betting that the bull trend will resume. Here we have a bear breakout, an attempt at a failure bear breakout. Bulls are hoping to create a failed bear breakout, about a 50% pullback from the bull trend, maybe a breakout test of these highs. We have a high, we broke above it, and now we're pulling back, testing it. The bulls are hoping that this bear breakout will fail and reverse up. Bears are hoping the opposite. They're hoping that the bear breakout will will succeed and lead to a measured move down, or at least low enough down to make a profit. We tried to reverse up. The bulls are trying to make the bear breakout fail. The bears are betting the bear breakout will be successful. They'll place stop orders to go short just below the low of the prior bar, and they would be filled right here. And they did get enough down for at least a scalp. Every trend bar is a breakout. Every series of trend bars is a breakout. A breakout can be a single bar, and it can be a series of bars. Here, we have a pair of consecutive very big bear trend bars. You can say the breakout began there, but I think the breakout began here. I would view this as a 2-bar bear breakout, yet it's a 5-bar bear microchannel, 5 bars down without a pullback. It's a strong bear breakout. The bulls are giving up. Bulls are selling out of their longs, and bears are selling into shorts. Strong bear breakout. You have trapped bulls who have not yet exited their longs. They're hoping for any kind of a pullback so they can get out with a smaller loss. You have bears who saw this happening, but for whatever reason did not short, and they're trapped out. They're looking for any kind of a pullback so that they can short at a higher price. We have a reversal, bear breakout, and an attempt at a failed bear breakout. But look at the reversal attempt. A lot of bars with small bodies, prominent tails, and a lack of consecutive big bull bars. We have a pair of bull bars here, consecutive, but small compared to the bear breakout bars. So this is probably a minor reversal, which means either a bear leg in a trading range or a bear flag. And in either case, you'll expect at least a small second leg down. Here we got trend resumption down, not simply a dip in a trading range. So this became a bear flag in a trading range instead of a bull leg in a trading range. This rally is mostly from bears taking profits, trying to reduce their risk. So if they short, their stop is now far away, and the best way to reduce that risk is by reducing their position size. So you have bears buying back part of their position, taking partial profits. Whenever I see a breakout, we have a bull break, and then I see a reversal, a failed breakout, I'm always comparing the strength of the breakout and the reversal. Here, we don't have much information, so maybe we have to look at some additional bars. We have a weak breakout up and a fairly weak breakout down. We have a bear bar, but a doji follow-through bar, and it's still a higher low. Bull breakout, but no consecutive big bull bars closing on their highs. We have a bear breakout, but no consecutive big bear bars closing on their lows. Bad follow-through. The bulls have a breakout, but look what it's followed by. And we have a bear breakout, and look what follows the bear breakout. A lot of overlap, and gaps are filled immediately or pretty quickly. Gap is closed that high. Tried to get a gap here, but did not close above that bar. Whenever a situation like this is unclear, bull breakout, possible reversal, possible bull flag, things are unclear, usually that means sideways, usually better to wait for more bars, wait for more information. Here, bull breakout, bear breakout, big up, big down, actually a small version of it, leads to big confusion and sideways. This is bad context for taking trades. The range is so tight, very difficult to make money, even for scalping, even with limit orders. There's no significant buying or selling pressure. Alternating bull and bear bars, prominent tails, small bodies, lots of little dojis, a very tight trading range, better not to trade. Is one side clearly stronger here? Are the bulls clearly stronger? It's still lower highs. Are the bears clearly stronger? No. If one side is clearly stronger, then that increases the chances that that side will win and we'll get a breakout in that direction. At this point, is it still unclear, or is one side clearly stronger? The bears have a bear bar closing on its low. It's a big bear bar. It closed below the low past 20 or 30 bars. The bears are clearly stronger. The odds are we're going at least a little bit lower. We have 3 consecutive bear bars, a very big bear bar closing far below the lows of all the prior bars. Odds are 60% chance this bar will result in some kind of a measured move down. So chances are we're going lower. And that's why the bar looks like this. Everyone saw it as it was forming. It was becoming a big bear bar. And traders were selling, betting that it would go lower quickly. It might pull back, but it may simply go straight down. So a lot of traders were willing to sell right away just in case there is no pullback. Good context for a breakout, successful breakout. We're in a tight trading range. We're in breakout mode. One side is probably going to win. And then we get a bar, a huge bar, big gap between the close of the bar and the low of the prior bar, the close of the bar and the low of the past 30 bars. Lower prices are likely. The bears are clearly stronger. Bear breakout, and look what followed. Good follow through, big bear bar closing on its low. That increases the chances that we're going lower.